Hi friends, I'm recording the small intro video before you see the revision videos for the balance chapters. In our latest revision which we conducted, we have covered 7 important chapters, and for the balance chapters, I am giving you my third edition revision videos. What we are using now is the fourth edition, and these are the videos from the third edition revision videos. Now what you need to do is you will have to download the video material from the link which is given in this video. Download the concept book and the revision material. Go through the video with these material, and thereafter you can use the fourth edition material for your completion preparation. No major difference between the third and the fourth edition. And for every video I've given detailed timestamp, so you can click exactly what you want to see. Somebody wants to just see concept, you see only concept. Somebody wants to see concept and question, then you click on the question as well. So you can do all that, but please keep in mind that the videos which are coming to you now is from my earlier edition. It is from the third edition, not from the latest fourth edition. But there is no major difference. The major difference is in concept book, where the latest edition has charts, the earlier edition does not have charts, and some numbering changes would have happened. So you go through the videos fully. After you go through the videos with third edition, use fourth edition to complete your preparation, or you can use third edition also for the earlier set of chapters. Thank you, friends.
Okay, guys, let's start. We'll start with chapter 7, which is on guys, please. We'll start with chapter 7, which is on cost accounting system. I'll first initially discuss all the concepts in this, and then I'll take you through few problems around this. Now, when we initially started, we did something called as a cost sheet, where we learned there were various categories of cost like material, labor, overheads. Guys, there were multiple categories of cost like material, labor, and overheads, which we had separate chapter. Now all this is accounted. Accounted is passing journal entry, doing ledger posting, preparing a trial balance, getting to know the profit or loss is done through a chapter called cost accounting system. To put it simply, here we are going to maintain accounting records, pass journal entries, prepare ledger accounts, get to know the profit, costing will show a profit, financial will show something else, and do a reconciliation of that. So we technically have two methods of maintaining costing records. One is called integrated system, where costing and financial records are maintained together. We integrate them together and maintain it as single system. Maintain it as single system. When we maintain this as single system, there is no need for reconciliation of profits, because I do not have separate system for these two. There is no need for reconciliation of profits. Then I have a non-integrated system where costing records are maintained separately and financial records are maintained separately. In this case, there will be a need for reconciliation, because costing will show a different profit, financial will show a different profit. So predominantly we are going to analyze non-integrated system in this chapter. Non-integrated system, where we are going to maintain separate records for costing, separate records for financial. Under non-integrated system, the most important thing is understanding journal entry. For understanding journal entry, I'll have to go through what I do in my cost sheet. In my cost sheet, the first item is direct material. So first journal entry is for purchasing raw material. If you have any inflow of raw material, stores control will be debited. Stores control. If raw material is increasing, stores control debited. If raw material is decreasing, stores control credited. So if I'm buying a raw material, stores control account debit to, technically we will do to creditor account. We do not maintain a creditor account, so it's called to GL adjustment. We do not maintain a creditor account. It is called to GL adjustment. If you follow integrated system, wherever you see this word GL adjustment, that will be changed. So if it's integrated system, the journal entry will be called stores ledger control account debit to creditors account. And in financial accounting, the entry is called purchases account debit to creditors account. Purchases account debit to creditor. Purchase return, raw material will go down. Purchase return, raw material will go down. So I credit stores ledger control. I credit the store. Issue of raw material to production. If I issue from raw material to production, raw material goes down, WIP goes up. Raw material goes down and WIP goes up. So the journal entry is called WIP control account debit to raw material control account. WIP is increasing, which is increasing, which is decreasing. That's what you have to see. Return of raw material. From there, they return it back. From there, they return it back. If they are returning it back from there, raw material will go up now. Raw material will go up. WIP will go down. If it is going up, raw material control is like an asset. It's like an asset. So if it is going up, stores ledger is debited. WIP control is credited. Normal loss. There will be two types of losses. One is called normal loss of raw material and abnormal loss of raw material. Normal loss is a factory overhead. Normal loss is a factory overhead. Abnormal loss will go to costing P&L. Abnormal loss will go to costing P&L. So for normal loss of material, we will be doing FOH control account debit. Two stores. Why two stores ledger? Raw material goes down. Raw material goes down. Abnormal loss, raw material again goes down. Sometimes I may issue my raw material for maintenance purpose. What is maintenance purpose? Is factory maintenance. It could be administrative office maintenance, selling office maintenance. Wherever you are issuing it, debit that overhead account and credit stores ledger. Credit stores ledger. Reason is raw material is going down. Raw material is going down. Whenever raw material goes down, please keep crediting the raw material control account. Sometimes I may transfer one raw material from one job to the another job. That is, there is a stores, there is a production. Within production, if you are doing any transfer, the technical journal entry is WIP1 account debit to WIP2 account, which we don't record. We don't record because it's under WIP only. It is under WIP control. From one account, it will go to another WIP account because within the production, they are shifting. A rare scenario, a purchase. Normally, what happens is whenever I purchase something, purchases will come to stores and then will go to production. When it comes to stores, we pass an entry called stores ledger control account debit to the whatever general adjustment, and then we do WIP control account debit to stores. A rare scenario, I may purchase it directly for a special job. Special job means it will directly go to WIP. It will directly go to WIP. It will not even come in raw material control. It will not even come in raw material control. So here, purchase of raw material increases raw material, debited. Purchase return decreases, credited. Issue of raw material decreases, credited. Return of raw material increases, debited. Normal loss of raw material decreases, credited. Abnormal loss of raw material decreases, credited. Issue of raw material for maintenance decreases, credited. Transfer of raw material, no impact. And issue for special job directly goes to WIP control. This is in the cost sheet, direct material is over. In the cost sheet, direct material is over. After direct material, I have direct labor. First, we will pass payment entry. Payment entry is wages account debit to bank account. We don't call it as wages, we call it as wages control. And we don't call it as bank, we call it as GL adjustment. Wages control account debit to GL adjustment. In this wages, there can be a direct wage, there can be a indirect wage. Direct wage will increase my WIP value. Direct wages will increase my WIP value. Indirect wages is a factory overhead. So I remove it from here and take it to factory overhead. I remove it from here and take it to factory overhead. So we pass an entry called WIP control account debit. WIP control account debit, which is for direct wages, which is for direct wages. And you have your indirect wages. You have your indirect wages, which is factory overhead control account debit to wages control, to wages control. In case any idle time comes, which is a rare scenario, but if it comes, that will go to costing P&L. See, what we are doing is we are crediting wages control. What is the use of crediting the wages control is when you credit wages control, the wages control value will go down. The wages control value will go down. Debit, wages control goes up. In the end, I have to make it zero. In the end, I have to make it zero. So from the wages control, something will go to WIP, something will go to factory overhead, and something may go to costing P&L. Next is direct material done, direct labor done, direct expense in the cost sheet. Direct expenses, we do not open a separate account. So in case you incur anything on direct expense, please take it to WIP control. Directly take it to WIP control account, debit to GL adjustment account. So direct material done, direct labor done, direct expense done, prime cost calculated. Then comes factory overheads. If you pay any factory overhead, journal entries, factory overhead control account debit to bank account, which is called GL adjustment. Bank account, which is called GL adjustment. Whatever is incurred, I will absorb. I will absorb. Absorb means from the factory overhead, it will go to WIP. If you see the process, direct material, you debit something and move it to WIP. Direct wages, you debit to wages control, move it to WIP. Direct expense, directly move to WIP. Factory overhead debit, move to WIP. And this total is called gross works cost. The total is called gross works cost. So I will absorb this to factory overhead. They absorb this to WIP control. Any under or over absorption there will go to debit side of P&L under absorption, credit side of P&L over absorption. Over absorption is a profit, under absorption is a loss. So we have reached factory overhead. Now I get gross works cost. In the WIP account, you will have gross works cost. Write the opening WIP to balance carried down. Write the closing WIP by balance brought down. So GWC, add opening WIP, less closing WIP, you get your net works cost, which is technically called cost of production because we don't have those 5 line item. So in the WIP, I will complete the production. I'll complete the production. Whatever I'm completing, WIP goes down, FG goes up. WIP goes down and FG goes up. So FG control account is debited, WIP control account is credited. What WIP did is it took something from direct material, took something from direct labor, took something from direct expense, took something from factory overhead and moved everything to FG control. Moved everything to FG control. Then entries relating to FG. Whenever entries relating to FG comes, if an organization sells something, 2 entries have to be done for sales. First is normal sales entry. What is normal sales entry? You will do bank account debit to sales account. Bank account debit to sales account. Bank is not debt. GL adjustment. And whenever units are sold, you will have to remove that from the FG. You will have to remove that from the FG. So we pass another entry. One entry is for sales, which is 1 lakh rupee. Cost for that could be 80,000. Cost for that could be 80,000. So one entry is recording sales at selling price. Recording sales at selling price. And another entry is at cost price. Another entry is at cost price where FG is debited, FG is credited. FG is credited because FG will go down and it will go to an account called cost of sales account. It will go to an account called cost of sales account. You can even open a COGS account, but we normally directly do a cost of sales. We normally do directly a cost of sales account. So it will go to an account called what? Cost of sales account. In this account, I will add in the cost of sales account, something comes from FG, something will come from administrative overhead, something will come from selling and distribution. So next, I incur administrative overhead. Incur entry is very simple. Administration overhead to bank account. To bank account. And you absorb this. Administration overhead will be absorbed to cost of sales account. Selling overheads will be absorbed to cost of sales account. Any under or over recovery will again go to costing P&L. Now, this stage, all accounts would have got closed. Sales and cost of sales is not closed. Close sales by shifting to costing P&L. Close cost of sales by shifting to costing P&L. Costing P&L will have sales in the credit side, cost of sales in the debit side, and profit is the balancing figure. Profit is the balancing figure. So whatever you do it in a form of a cost sheet, instead of doing it in the form of a cost sheet, we have to do it in account form. We have to do it in account form. What is the order? I will follow the order of cost sheet. Direct material. Any amount which increases raw material debited. Any amount which decreases raw material credited. Any amount which increases wages paid debited. Any amount which is analyzed, reduce it. Then direct expense will directly go to WIP control account. Factory overhead, any amount you incur debited, any amount you absorb, remove it. Absorption is removing it from that account. Any balancing figure, take it to costing P&L. Then my WIP, lot of debits have happened. Remove it to FG. Remove it to FG. Then in the FG account, I have opening balance. I got something from WIP. Transfer what you sold to COS account, cost of sales account. In the cost of sales account, I'll add my selling and distribution overhead. I'll add my administration overhead, and I'll get to know cost of sales. It will go, all will go to costing P&L. We'll see this in a question. Now, this is the order I was talking about. Every question will have to follow this order correctly. First is stores ledger control account. This is the order of balancing and order of writing entries. In the stores ledger account, every question should have these 4 items. When you write direct material, you write opening stock plus purchase minus closing stock, raw material consumed. So there should be an opening balance, there should be a purchase, there should be a closing balance, and issue to WIP is called raw material consumed. Issue to WIP is called raw material consumed. These are mandatory entries. These are mandatory entries in my stores ledger control account. Mandatory entries in stores ledger. After direct material, I have direct wages. In the debit side, you will pay. In the credit side, you will transfer to WIP. In the credit side, you will transfer to WIP. Direct material done, direct labor done, direct expenses not there. Prime cost, no separate account. Factory overhead in the debit side, incur it. Credit side, absorb it. Credit side, absorb it. After factory overhead, WIP. WIP will have an opening balance. It will get something from raw material. It will get something from wages, something from factory overhead. Transfer this to FG. Transfer this to FG, and there will be a closing balance. There will be a closing balance. FG control will have an opening balance. It will take something from WIP, shift this to COGS and a closing balance. Shift this to COGS and a closing balance. After that, AOH, incurrence, transfer. SOH, incurrence, transfer. Cost of sales, you will get something from FG and shift it to costing P&L. Shift it to costing P&L. Sales, record the sales, shift it to costing P&L. Clear? Any doubts on this? Apart from this, we also have something called as a reconciliation. Now, what is reconciliation is my financial account shows a different profit, costing shows a different profit. The reasons for difference can be multiple. Certain transactions are recorded only in financial book, but not in costing book. Example, interest on loan, income tax, dividends paid, the interest income, rental income. All these items you record in financial accounting. In cost sheet, you don't record it. This leads to difference in profit. Or some items I record in costing. Example, notional rent, salary to proprietor, opportunity cost. All this costing allows, but financial does not allow. Saying that financial says if money is paid, record it. If money is not paid, don't record. Own rent, all that is not possible. And some amount may be different in costing, different in financial. Opening stock in costing is 20,000, financial is 30,000. Now, I have a format to do reconciliation. I'll explain this format when I do the problem. This format will help me in identifying the plus and minus items easily. There are two ways of identifying plus and minus item. One, you'll have to keep thinking which is going up, which is going down, and then analyze it. Or I have a format called serial number, item, figure as per end book, figure as per start book, difference, debit, credit, action, and amount. You will understand this when I do the problem. This will help me in identifying what are the items to be added in reconciliation, what are the items to be deducted in reconciliation. Now, reconciliation can be of 2-3 types. One, question will tell costing profit so much, financial profit so much, and 10 reasons are there. You just need to find out the reason plus certain items, minus certain item. This is one approach. Second approach, they'll give you so many transactions. You prepare one cost sheet that will give you costing profit. You prepare one trading and P&L account that will give you financial profit. Both will show difference. Both will show difference. Then you have to compare one item with the other item. Like when you do bank reconciliation statement, I can have statement in one side, I can have my book in one side, and then keep comparing. When I compare, I may find certain items which are causing the difference, certain items which are causing the difference. Then I have to do reconciliation. So reasons could be given in the question, and sometimes they will not give the reasons. You will have to identify. You will have to identify the reasons and do the reconciliation. Okay, this is what this chapter is all about. There are only one is journal entries. You should be very, very clear. Journal entries should be very, very clear. And the order is very simple. Direct material, direct labor, direct expense, factory overhead, WIP control, FG control, administration overhead, selling overhead, cost of sales, sales. This order, if you follow properly, you will be in a position to handle any type of question. So this is one approach which is there. And the second part is reconciliation, where I'll have a costing profit and I'll have a financial profit, and I'll have to find out the reasons for the variation. Clear? 2 minutes. I'll have to restart my system. There's some problem. I'll just restart and then we do the questions. Okay, we'll see few questions. First is on journal entries. This we are just going to discuss. Journalize the following transaction, assuming that cost and financial transactions are integrated. Integrated doesn't mean you need a different entry. Wherever that general ledger adjustment, I said GL adjustment, there are different names for it. Cost ledger control, that name will not be used, and we will use a name called bank account, debtor account, creditor account. Those names will be used in place of that. Raw material purchased, raw material value goes up, goes down. Participate. Goes up. Stores ledger control account, debit. to creditor account in case you have not made the payment, or to bank account, stores ledger control account debit to bank account. Direct material issued to production, raw material goes down, goes up, goes down. WIP control account debit to stores ledger control account or raw material. Different names will be used in different question. Wages paid. First, tell me the entry for wages paid. 30% indirect, we'll see later. Wages payment. Wages control account debit to bank account. In this, I'm analyzing now. What I'm analyzing? 30% is indirect, 70% is direct, which is this 84,000. Direct will go to WIP control, indirect will go to factory overhead control. So the entry will be WIP control account debit, factory overheads control account debit to wages control. Wages control is closed. Wages control is closed. One you debited for 1,20,000. Now you are crediting for 1,20,000. Manufacturing expenses incurred. Any expense you incurred, what's the journal entry? Expense account debit to bank account. We don't call expense, we call it as manufacturing overhead control or factory overhead control account debit to bank account. If you have paid it, if you have not paid it, to payable account. So factory overhead control account debit to bank account, and charge to production means absorb to production. Charge to production means it goes to WIP. So the entry will be WIP control account debit to factory overhead control account, to factory overhead control account. First you debit for whatever you have incurred, then you absorb it. Selling and distribution cost, I don't know whether it is incurred or absorbed. I'll write two entry. Incurred is selling overhead control account debit to bank account. Selling overhead control account debit to bank account. Absorbed is it will go to cost of sales. Absorb means which account it will go. Cost of sales account debit to selling overhead control account. Cost of sales account debit to selling overhead control. Finished product at cost. You need to understand this. This technically means production during the year. This terminology technically means production during the year. When production happens, FG will go up, WIP will go down. FG will go up, WIP will go down. So entry is FG control account debit to WIP control account. FG control account debit to WIP control. Sales normal entry, bank account debit to sales account or debtors account debit to sales account. Now closing stock is nil. It means this 2,90,000 sales, the cost for that is 2 lakh. Whatever you produced, you have fully sold. Whatever you have produced, you have fully sold. So whenever sales happens, I need two entry. One entry is bank account debit to sales account. Second entry, FG has to go down. FG has to go down. So 2 FG control. 2 FG control. But you cannot write 290 because FG cannot go down by 290. FG sales has a profit element. Sales has a profit element. FG doesn't have any profit element. So the entry there is cost of sales account debit or COGS account debit to FG control. COGS account debit to FG control. This is self-explanatory. Receipt from debtor. Receipt from debtors is bank account debit to debtors account. In case it's non-integrated, I don't have bank account, I don't have debtor account, so I cannot write saying cost ledger control to cost ledger. No entry in non-integrated. In non-integrated system, I'm least bothered whether money is collected from debtors, money is not collected from debtors, money is paid to creditors, not paid from creditors. All this is not my worry. So under non-integrated, these two entries will not come. The question has asked for integrated. So we have done the entries for integrated. You see the word creditors. In place of creditor, you have to write GL adjustment or cost ledger control. That becomes non-integrated. That becomes non-integrated. Okay. Now ledger maintenance. A company operates on a job cost accounting system which is not integrated, with the financial accounts. At the beginning of the month, the opening balance in cost ledger, where there's an opening raw material stores ledger, opening WIP, opening FG. There's an account called building construction. What is building construction? Is building which is yet to be constructed, building which is yet to be completed, and cost ledger control. If you see here, all this will have debit balance. This alone will have credit balance. This alone will have credit balance. Please open 4 accounts now. Stores ledger control account will need 8 lines, WIP 10 lines, FG 8 lines, building construction 8 lines. Open 8 to 10 lines. You open the 5 accounts. Stores ledger control account debit. Sorry, that is debit and credit, please. Debit, credit, stores ledger control account. Particulars amount, particulars amount. WIP control account. We will need extra accounts, but as of now, open these. WIP control account. FG control account. Building construction account. Building construction account. Whatever name the question has used. Cost ledger control. Some question they'll use the word general ledger adjustment account. Cost ledger control account. Technically, it's a suspense account. That's all. What is cost ledger is? It's a suspense account. We are not bothered about what it is. Cost ledger control account. Now, in every account, write the opening balance to balance brought down. To balance brought down. To balance brought down. Stores ledger 80. WIP 20. FG control 430. Building construction 10. And cost ledger control by. My trial balance is tallying as of now. These are my opening balances. By balance brought down. Opening balances 4 ledgers, debit balance, 1 ledger, credit balance. 4 ledgers are debit balance, 1 is credit balance. Can you proceed? Let's look at the transaction. Material purchased. Tell me the journal entry. Material purchased. Stores ledger control account debit to cost ledger control. Stores ledger control account debit to cost ledger control account. Do the posting. Stores ledger control account debit to cost ledger to CLC account. To CLC. I am using short name. You need not, in exam you cannot use it, in class okay. To CLC account 40. By SLC account 40. By SLC account 40. In class short form is okay. In exam no short forms okay. By SLC account 40. Next transaction issued to production. Tell me the journal entry. Issued to production. WIP goes up, raw material goes down. WIP goes up and raw material goes down. So by WIP control, by WIP control, by WIP control, by WIP control 50. Again, this area is very simple if you are able to understand the transactions properly. To SLC 50. By WIP control 50 to SLC 50. Next is issued to maintenance. Maintenance is a factory overhead. Issued to maintenance. Maintenance is a factory overhead. Raw material goes down, goes up. First tell me. Goes down. We will credit it. We will credit it right by factory overhead control account and open a factory overhead control account. Open new account. By factory overhead control account. By FOH control account 6. Open FOH control account. Factory overhead control account. FOH control account. To SLC account. To SLC account 6. Issued to general maintenance. Issued to general maintenance. Raw material values going down. Raw material values going down. Clear? Then next is issued to what? Building construction, listen, building construction means the value of building under construction goes up and raw material goes down. Raw material goes down. So this will go to my building construction account. This will go to my building construction account. So go there, buy building construction, buy building construction, reduce the raw material value, buy building construction, how much? 4, and in the building construction account, in the building construction account, to SLC, to SLC account 4. Majorly raw material entries are over. If later on anything comes, we'll see. So raw material going up debited, raw material going down credited. Very simple approach. Clear? Next is wages paid, gross wages paid. Tell me the entry for wages paid. Wages control account debit to CLC account, to paid to CLC. In that direct indirect is later analysis. Wages control to CLC. Open a wages control account. Open a wages control. FOH control, another some 6 lines you will need. Now onwards, whichever account you open, 6 lines is sufficient. Wages control account to CLC account 150. To CLC account 150. To CLC account 150, and go to cost ledger, buy wages control account 150, buy wages control account 150. Clear? Simple wages control to this. Then in this, indirect is 40, building construction is 10. Logically, the balance 100 is direct, but that balancing figure and all we'll see later. Indirect will go to factory overhead. Indirect will go to factory overhead. So from the wages control, remove means write it in the credit side. In the credit side, right, buy FOH control account. Buy FOH control account 40. Buy FOH control account 40 to wages control 40. Direct wages and all I'll see later. Let's not worry now. Buy wages control 40 to wages control 40. Clear? Then building construction, buy building construction, take it to building construction account. Take it to building. From wages, I'm removing it. From wages, I'm removing it and taking it to the building construction account. It says issued to building, sorry, for building construction is 10. So right, buy building construction. Buy building construction 10. And in the building construction account, to wages control 10. To wages control 10. Clear? Works overhead amount incurred excluding item shown above. Okay, in this question, ideally name should have been works overhead control account and not factory overhead control. They have used the word works overhead. Take an exam situation, you take care. I have incurred. What is the entry for incurring works overhead? Amount incurred. Any expense account debit to bank account. We don't have bank. Bank is called CLC and works overhead control. So works overhead control account debit, right? Works, that is factory overhead control account debit to CLC account. To CLC account 160. To CLC account 160. To CLC account 160. Buy FOH control account 160. By FOH control account 160. Clear? They are saying whatever you incurred, you have absorbed 20 in building construction. That is removed from this account and take it to which account? Building construction account. Take it to building. Like from raw material we took something, WIP we took something. This also take it. So buy building construction. Buy building construction. Buy building construction account 20, and in the building construction account to FOH control 20. To FOH control 20. Clear? Next it says under absorbed 8. Under absorbed 8, open and say buy costing P&L. Under absorption will go to debit side. Under absorption will go to debit side of P and L. Over absorption will go to credit side of P and L. By costing P and L and open a costing P and L account. Open a costing P and L account. By costing P and L 8. Under absorption. Under absorption. Open a costing P and L account. Costing P and L account. Costing P and L account. 2 FOH to FOH control account 8. Under recovery will go to the debit side. Under recovery will go to the debit side. Any doubts on this? Then the next transaction is royalty paid. Royalty is a direct expense. Royalty is a direct expense directly in the WIP control. Directly in the WIP control. WIP control to bank. Bank is not there. To CLC. WIP control to bank. Bank is not there. So in WIP to CLC account. To CLC account. Royalty. To CLC account royalty 5. To CLC account royalty by WIP control. By WIP control 5. By WIP control 5. Clear? Any doubts on this? Then it says selling, distribution and admin overhead. I'll have to open a new account. I'll call it as selling and admin overhead, SOH and AOH control account. I'll give a name SOH and AOH control account to bank account. Bank account is not there. Bank account is not there. Open new account. The only problem is we'll have to keep opening multiple accounts, but in the end you will get to the answer. SOH and AOH control account. SOH and AOH control account to CLC account. To CLC account 25. To CLC account 25. In the CLC account by SOH and AOH control account. By SOH and AOH control account 25. By selling and admin overhead control account 25. Clear? Be the journal entry for sales. FG is cost of sales. FG is on the cost of sales. Normal sales, what is the entry? Bank account debit to sales account. I don't have a bank account. I don't have a bank account. CLC, open a sales account. Open a sales account. To sales account 450. To sales account 450. Open sales account. Open sales account. To sales account 450. And open sales account. You will understand this better when I go to balancing part. Once all transactions are written by CLC account 450. By CLC account 450. Clear? The next it says at the end of the month stock of raw material and WIPs 55 and 25 in the raw material control account by balance brought down, in the by balance carried down, and in the WIP control account by balance closing balance 55 and 25. So right here in the raw material control, leave one line gap in case any balancing figure comes. By balance carried down 55. By balance carried down 55. In the stores ledger control, by balance carried down 55, and this side by balance carried down 25. By balance carried down 25. You have to keep writing transactions. So once you write all transactions, everything else will automatically fall in place. Then it says Loss arising in raw material is treated as factory overhead. When I do the balancing, you may find a loss in raw material control account. Loss two types is there: normal loss, abnormal loss. Normal loss goes to factory overhead. Abnormal loss goes to costing P&L. The question has said, please treat it as factory overhead. Please treat it as factory overhead. So when I close the account, I will tell you. As of now, let's leave it. Building under construction is completed. This is to close the building under construction. GP margin is what? 20%, which means COGS is 360, sales is 450, and cost of goods sold is 360, 20% less. This will be removed from my FG. This will be removed from the FG. So in the FG control, by cost of sales, we call it as cost of sales, not COGS. In cost of sales, we will add selling and other things. By cost of sales account 360. By cost of sales account 360. Go to FG control. By cost of sales account, 360, 450 minus 20%. Open a cost of sales account. Open a cost of sales account. Open cost of sales account. To FG control 360. To FG control is 360. Clear? Any doubts on this? Done? Now I have noted down all the transactions. Practically, that is when I have to do the balancing. I expect you to remember this order as well as the mandatory entry. If you don't remember, you will find it difficult. Remembering doesn't mean you will have to by heart it, it's logical. First is raw material control. Go to your stores ledger control account. See, is there an opening balance in stores ledger? Is there any purchases entry? There is purchases entry. You would have written to cost ledger control. You would have written to cost ledger control. Is there any issue to WIP? Is there a closing balance? Yes, it should tally. Not tallying, there is a loss in this question. That's all. These four are mandatory. These four are mandatory. Let's close this account. Let's close this account. It will not tally in this question. By factory overhead control, normal loss. This is technically normal loss. Sometimes what will happen is out of those four items, one will be balancing figure. They may not give closing raw material. That can be balancing figure. In this question, if closing raw material was not given, balancing figure would have been 60 in the credit side. Balancing figure would have been 60 in the credit side and we would have closed it. They have given all the four. Mandatory four items are there. Take this to factory overhead control. Take this to factory overhead control. To SLC account 5. To SLC account 5. Clear? Direct material over. Next is direct labor. Look at wages control. In the debit side, is there a payment entry? In the debit side. In the credit side, is there a WIP entry by WIP control? No, that's the balancing figure. That's the balancing figure. Please close that account. Please close the account. By WIP control. By WIP control. Close this account. Mandatory are these two. Apart from that, extra can be there. This indirect wages, building, all these are extra. Mandatory, one payment, one absorption. Take this to WIP control. Take this to WIP control. In the WIP control, to wages control. To wages control, 100. Clear? Direct material done. Direct labor done. Cost sheet. Keep remembering cost sheet. Everything else will automatically fall in place. Next is factory overhead. In the debit side, is there a payment entry? Look at your factory overhead control account. Can we move to factory overhead? Is there a payment entry in factory overhead control account? To CLC. To CLC. Is there an absorption entry to WIP? No, that's balancing figure. That's the balancing figure by WIP control. By WIP control account. By WIP control account. $183. By WIP control 183. I'll write this in WIP control. By WIP control 183. Any doubts on this? Clear? So in the WIP control, two FOH control accounts 183. Clear? Next is WIP. Look at your account. Is there an opening balance in WIP control? Participate. I want participation. Is there any transfer from stores ledger control? From stores ledger. Anything from wages control? Anything from factory overhead? Any transfer to FG? Any transfer to FG? Closing balance? So the balancing figure is by FG control. Balancing figure is by FG control. By FG control. This is production during the year. By FG control account. By FG control account. Production during the year. 333. This is technically COP, cost of production. This is technically COP. By FG control. Clear? And here we will write WIP control 333. To WIP control 333. Any doubts on this? Then it says order WIP is closed. FG. Is there an opening balance in FG control? Any transfer from WIP? We just now wrote. Any transfer to cost of sales? Closing balance is balancing figure. By balance carried down, this is closing FG. This is closing FG. It's very simple, process driven, time consuming little bit, but if you practice 2-3 questions, then you can do it faster also. By balance carried down 403. Any doubts on this? Done. After FG, admin overhead control. Admin overhead control, we opened SOH and AOH. First is incurrence entry. Is there any entry on debit side? And please move this to by cost of sales account. Move this to cost of sales. Move this to cost of sales account. Clear? So this comes in my cost of sales account. Now it's over. Question is almost over. To AOH and SOH control account. Listen, this is COGS. This is selling overhead. Put together is cost of sales. By costing P&L. Take it to P&L account. By costing P&L 385. By costing P&L 385. This is to costing P&L. Sales will also go there. To costing P&L 450. Sales and all is just a formality. I don't even need it. I can directly also write it, but rules are like this. By costing P&L to costing P&L. So I come to costing P&L by sales 450 to cost of sales 385. This will give me profit or loss for the year, which will go to cost ledger control, because the entry for profit or loss is P&L account debit to capital. I don't have a capital account. I don't have a capital account. This will also go to cost ledger control. Cost ledger control to CLC account profit for the year. To CLC account profit for the year. How much the profit? 57. To CLC account profit for the year. Any doubts on this? I come to CLC account by costing P&L account. How much the figure was? 50. 7. All accounts are closed except two. One is the cost ledger is the last closure. Okay, building construction is not closed. They have said building is completed. If building is completed, entry is debit the building account, credit the building. I have to close this. Buy building account, which I don't have. I don't have a building account, so buy CLC. Buy CLC. We are closing this account. That's all. Buy cost ledger control account. I do not have a building account. I do not have a building account. So to close this, buy cost ledger control. Buy cost ledger control. How much is the amount? 50, 44, no? And that's our last account which has to be closed. To building construction 44. One, ability to write the journal entries properly is very critical, and second is flow of transaction. Flow of transaction. If you can exactly do proper flow, you'll be able to get to the answer in a smooth manner. CLC balancing figure is how much? CLC balancing figure 977 minus some 483 I get. Clear? Now question may, I don't know what was even asked in the question. Prepare the relevant accounts. That's all. Relevant control account. I would have done a trial balance mostly just to finally show our answer is right. Okay, trial balance is not done. But in the trial balance, what will come? I'll tell you. 55 will go to trial balance. 25 will go to trial balance 80. And 403 will go to trial balance 483. That's all. Raw material control, stores control, WIP control. Every other account is closed. And cost ledger control was 483. Cost ledger control was 483. Clear? Any doubts on this? Most important is understanding the sequence properly. Sequence is very simple. It is the order of cost sheet. What is mandatory in those accounts is very critical for you to balance the account. So I have one more question which I'm not doing, but this is a reverse working question. If you follow exactly the pattern, you will be able to close the accounts and get to the answer. Exactly the rule. The rule is first raw material control, then WIP, then your direct wages, then comes your factory overhead, then comes your WIP, then comes to your FG. If you follow the order and the mandatory ones and the mandatory, this is a very good question where they've asked you information. If you open the accounts and record all transaction, automatically you will get to the answer. A very good problem for you to practice. Now, what is predominantly tested in exam is reconciliation. So I'll come to reconciliation question. This is one type of reconciliation where a manufacturing company disclosed a net loss of 347 as per their cost accounts for the year ended March 31, 2014. Financial accounts disclosed a net loss of 5,10,000 for the same period. So costing 347, financial is 5,10,000. Our job is to do reconciliation. Our job is to do reconciliation. Reasons are given in the question. What I need to do is I need to add certain items, deduct certain item. They have asked for something called as memorandum reconciliation account. Account means the reconciliation will be in a debit and credit format rather than plus and minus format. What to do, I'll explain. Now, whenever we do a reconciliation, we will have a starting book and an ending book. You can start your reconciliation with costing, end with financial, or start with financial and end with costing. That's your wish. One order you have to decide. I will keep it as, I'll follow whatever it is. Okay. My starting will be financial in this question. The solution is presented that way. I'll do that. Starting is this. Ending is this. Starting is showing negative 510. Ending is showing negative 347. Ending is showing negative 347. I have 10 items. One is you think about every item and find whether it is plus or minus. Other approaches which I'm going to teach you, whichever way you are comfortable. If you can logically think also, it's fine. Now write identification of plus and minus item. Identification of plus and minus item. Plus and minus item. Serial number item causing difference, figure as per end book, figure as per start book, figure as per end book. You please write this. 8 columns, I think. Figure as per start book, difference, debit, credit, action, amount. 8 columns. In here, right? End book is equal to costing, start book is equal to financial. That is how I am solving it. Okay, you can solve it in either ways. Some question will specifically say which is starting, which is ending. Now it's very simple. First item is, right, serial number 1, factory overhead. Factory overhead. See, under absorbed or over absorbed is all costing feature. It is not a feature of financial accounting. Financial accounting value is, financial book value is 0. Financial book value is 0. Costing is under recovered. Under recovered means lesser. Under recovered is lesser. Minus 40. Minus 40. Minus 40,000 and 0. Minus 40,000 and 0. Now what you need to do is listen. Third column minus fourth column. I want you to do 3 minus 4 and tell me what amount you get. 3 minus 4. What amount will you get? Minus 40,000. If you get minus 40,000, sign write it here. Sign. Amount write it here. Sign write it here. Minus 40. You told me minus 40. Sign write it here. Amount write it there. Clear? Column 3 minus column 4. Sign write it in the 5th column. Amount write it in the 8th column. Factory overhead. Factory overhead. Is it a debit item or a credit item in a normal P&L? Factory overhead. Under recovery, over recovery, don't tell me. Only factory overhead is a debit item. All debit will reduce my profit. All debit will reduce my profit. So debit means minus. Debit means minus. In my reconciliation, I'm going to do minus into minus. Finally, this item will be added. Finally, this item will be added in the reconciliation statement. Minus into minus. Minus into minus. I'll do 2-3 items and you will get full clarity. Minus into minus. In the reconciliation, what we will do? We are just going to add this item. Let me write 2-3 items. Point number 2. Second item is admin overhead. Over absorbed. Financial 0. Financial doesn't have all this. Financial 0. Over absorbed. Over absorbed means you have recovered more. 60,000. 60,000 minus 0. Tell me the sign first. Is it a plus sign or a minus sign? Plus. Amount is 60,000. Plus and amount is 60,000. 60,000 minus 0 is plus 60. Plus 60. Debit or credit. Admin overhead. What do you do normally? Debit. Minus. Plus into minus. This is minus. Plus into minus. This is minus. Let me write 3-4 items and then full clarity will be there. Point number 3. Depreciation. Depreciation. Tell me how much depreciation in costing. Financial is 3,25,000. Costing is 2,75,000. So costing 275. Financial 325. Subtract and tell me the sign. Minus amount. 50,000. Depreciation, debited, credited. Minus into minus, plus. In the reconciliation, add it. In the reconciliation, add it. Minus into minus, plus. Clear? Able to understand this? Clear? Next item, interest on investment not included in cost accounts. Interest on investment, costing 0, financial 96,000. 0 minus 96,000, 0 minus interest on investment, debited, credited, plus, credit is plus, minus into plus is, in the reconciliation I'll subtract it. In the reconciliation I'll subtract it. Fifth item. Fifth item is income tax. Income tax. Income tax will be provided only in financial book. Income tax will be provided only in financial book. So costing is 0. Financial is 54,000. 0 minus 54,000 is minus 54,000. Income tax debited, credited. Debited, minus into plus. Debited, minus, minus. Minus into minus is plus. Clear? Any doubts on this? Please do next to 4 items like that. Next to 4 items. Write the next item: interest on loan, transfer fees, stores adjustment, dividend receipt. This will help you in identifying plus and minus item very easily. Other approaches to think logically and find out. I am more comfortable doing this. This ensures I get to my right answer. The important part is what is starting, what is ending. That has to be defined, and accordingly you will have to do. Third column is starting, ending book. Fourth column is starting book. End book and start book. You change the order, answer will change. What is plus will become minus, what is minus will become plus. Okay, assuming you are able to do this, which is these answers. Transfer fees is, I did till income tax. Okay, transfer interest on loan is plus, transfer fees is minus, stores adjustment is minus, dividend is minus. Beyond this, I'll take you through. Can you tell me the total of all plus items in your notebook? Total of all plus items. Whatever plus, plus, plus you have, tell me the total of all of that. Sorry, how much? 3 lakh? And minus items total. Minus items total. 2 lakh. Okay. Assuming there is only one item. I don't want to keep writing all the items. Approach is going to remain same. See, first approach, you need not write anything now. First approach is profit as per financial book. Profit as per, this is statement which is not needed in this question, but this is first approach. Financial book showed me a profit of minus 510. Be it profit loss, I'll just change the sign. Minus 510. Add plus items. You will have to write 1, 2, 3, 4, 5. All item you have to write, which I'm not doing. My plus items total is 3,89,000. Then deduct minus items is 2,26,000. In the calculator, minus 510 plus 389 minus 226. Negative, you would have got negative 347 loss as per costing book. Now in exam, what can happen is, recently what ICAI started doing is, they'll give you this, they'll give you all this, and they may ask this. Instead of doing reconciliation, they may ask, calculate the profit as per the other book, calculate the profit as per the other book. That is the ending book. Doesn't really make any difference. You have to identify plus and minus. Second is memorandum reconciliation account. Memorandum reconciliation account. Very simple. Minus means debit. Minus means debit, and plus is credit. Plus is credit. What is the total of all plus items? By plus items 3 lakh, minus items 2 lakh. What is our starting book? Which book it was? Financial book. To loss as per financial book. To loss as per financial book. How much? 5 lakh, 10,000. I close the account by loss as per costing book 3 lakh 47,000. This is called memorandum reconciliation account. In the memorandum reconciliation account, first write the loss in the debit side or profit in the credit side. That's known fact to you. Then all plus items will be credited, all minus items will be debited. All plus items will be, because debit means minus, credit means plus for us. Debit means minus, credit means plus. Any doubts on this? So this is one way of reconciliation. One way of reconciliation. Any doubts on this? So you see the statement here. This is the detailed statement. Item 1, item 2, item 3, item 4. You'll have to keep writing every item and keep writing, and you'll get to the loss as per the other book. Second approach is, I'll come to question 5 in a minute. This is another type of a question which we are not going to do. Listen. The financial books of a company reveal the following data. What you need to do? You need to do a profit and loss account. What will come in profit and loss account? 2 opening stock 74, 2 opening WIP 32, 2 raw materials 780, 2 direct labor 450, 2 factory overheads 3 lakh, 2 goodwill 1 lakh, 2 admin overhead 295, 2 dividends 85, 2 bad debt 12,000, 2 selling and distribution 61, by interest received, by rent received, by sales, by closing stock, by WIP. This will be the financial profit. This will be the financial profit, which they did not give you. They are saying you do all this extra work. You do all this extra work and get to the profit. What will happen to costing? Prepare a cost sheet. Prepare a cost sheet. For cost sheet, I need direct material. If extra data is not there, copy paste the financial number. Copy paste the financial number. So if you see here, this is my financial accounting. This is my financial accounting. This is my cost accounting. I am not going to explain both of this because cost sheet we have already spent a lot of time. After this is done, I will check item by item. Direct material 7 lakh 80. Okay. Direct material here also 7 lakh 80 will not come in reconciliation. Will not come in reconciliation. Direct labor 450 will not come in reconciliation. Factory overhead 270. Here it is 3 lakh. So figure as per cost book 270, figure as per financial book 3 lakh, plus minus debit credit, all that you keep taking care. First reason why profits are different. Last question gave you 10 reasons. This you have to identify now. This you have to identify now. It will not give the reasons. This is one reason. Then opening WIP 32. Opening WIP 32, no problem. Opening WIP, same, no problem. Closing WIP 38, no problem. Admin overhead 298, 667, 295, second reason. This is a problem. 295 and 298, 295 and 298. Then opening FG 91,000, opening FG 91,000. Third reason 74, 375, 74, 375. Closing FG 48,000, closing FG 48,000. Here the closing FG is 41 250, 41 250. Fourth reason for variation in profit, fourth reason for variation in profit. Then selling and distribution 58, selling and distribution 58, here it is, doesn't end here. Then I have dividends, sixth reason, dividend is not there. Goodwill written off, seventh reason. Bad debt, eighth reason. Interest received, ninth reason. Rent received, tenth reason. So whichever item is not matching, all these are reasons. What last question did is, they gave you financial profit, they gave you costing profit, and they gave you all these reasons, they gave you all these reasons. What you did, you started from the reasons and found out the plus and minus item. If I want to increase the number of marks, since that question will be a 5-mark question, this type of a question will be a 10-mark question, where I tell you, you please calculate the financial profit, you also calculate the costing profit. See, there can't be anything simpler than this. This is just normal financial accounting. Costing, you have to do a normal cost sheet, no special adjustment, no special adjustment. If data is not there, you copy paste, the financial data. If data is there, you write it. Clear? Any doubts on this? Any doubts on this part? Then identify the differences, and these differences will be the reason for profit variation. I come back to this type of a question which involves journal entry. Let's come to question 5. You are given the following information of the cost department of a manufacturing company. Stores control account, opening balance, purchase, transfer from WIP, issue to WIP, issue to repairs and maintenance, shortage found in stock taking. Shortage can be a normal shortage, abnormal shortage. I'll have to write the reason. WIP, opening balance, wages applied. Wages applied means from the wages control account, it is coming here. Overhead applied, closing balance, finished product, other information. Shortage is treated as normal loss. Shortage is treated as normal loss. Stores control account, WIP control account, costing P&L account. P&L account is financial P&L. P&L is financial P&L and a reconciliation Please open the 4 accounts: stores control, WIP control, costing P&L, and P&L. This is a very frequently tested exam question. Stores control, WIP control, stores control account, some 8 lines. WIP control, WIP control account, costing P&L account, and a P&L account. And a P&L account. We will open certain extra accounts when needed, but these are the 4 accounts as of now. I will be needing cost ledger control, but I'll not open it because I'm not doing a trial balance and all here. No CLC account and all. Some accounts I'll open when I'll need it. Let's go through the question. Stores opening balance. Where should I record this? Stores control account, and one more place is in the P&L account, in the normal P&L to opening stock, in the normal P&L, in the normal, not the costing P&L. So to balance brought down, to balance brought down, to balance brought down 1260, to balance brought down 1260, and to opening raw material, to opening raw material 1260 in the P&L, in the P&L to opening raw material 1260. Clear? Next, purchases. Purchases, tell me the journal entry. Stores ledger to CLC account. I'm not opening CLC. I don't need CLC account. Do the entry. Stores ledger to CLC. To CLC. To CLC. How much? One more place this will come. In the normal P&L. In the normal P&L. Purchases. Leave one line for writing to opening WIP. Purchases 6720. Purchases 6720. Clear? What's the next transaction? Transfer from WIP means from WIP it's coming back. What's the journal entry? First tell me. Transfer from the stores ledger control account debit to WIP control. Listen, any entry where stores to WIP, WIP to stores, stores to wages, wages, all this entry will not come in normal P&L. Normal P&L doesn't work with all these entries. So from raw material issue to WIP, WIP to FG, all this is not my worry. I will record opening stock, I'll record closing stock, I'll record purchase, balances, consumption. That is what normal P&L does. So this entry will come only here. To WIP control, to WIP control account 3360 by SLC account 3360 by SLC account 3360. The next one, issue to work in progress by WIP control, by WIP control, by WIP control, by WIP control. How much? 6720. This side leave one line for opening to SLC account 6720 to SLC 6720. Wherever you write between two control accounts, all that will not come in normal P&L. What's the next item? Issue to repairs and maintenance. What's the journal entry? First tell me. Stores ledger control account will be debited, credited. Credited and debit to which account? Factory overhead control account. Normal P&L will not come. Normal P&L will not come. By FOH control, open FOH control account. By FOH control account. By FOH control account. Write it 2 times, okay? Shortage is also FOH only. 840 to 52. Shortage is also normal loss. Last line says it's a normal loss. 840 and 252. 840 and 252. And open FOH control account. FOH control account to SLC 840 252, 840 and 252. Any entry between two control accounts will not come in normal P&L. Clear? We are done with the first segment, which is stores, fully done. And WIP, opening balance 2 places, the P&L as well as here. To balance 2520 to opening WIP 2520 to opening WIP 2520. Clear? Wages applied means from the wages control account, it comes to which account? It comes to the WIP control. All this will not come. What will come is wages paid, that I'll do later. So in the WIP, to wages control and open a wages control account. To wages control account, wages control account 2520, open wages control 2520, wages control account wages control account, wages control account by 2520. Clear? Then it says overhead applied. Overhead applied means from factory overhead it is coming here. From factory overhead, this application and all we don't write it in financial accounting. So by WIP control here. By WIP control. By WIP control 90 lakh 8,000. By WIP control 90 lakh 8,000. 90 lakh 8,000. This comes here to overhead control 90 lakh 8,000. 90 lakh 8,000. There is a closing balance. This will come at two places. Here, right, by balance carried down. One line gap if anything else comes. By balance carried down. How much? 15 lakh in the normal P&L by closing WIP. By closing WIP 1520. Closing WIP is 15 lakh 20,000. Any doubts on this? Clear? I'll come to this finished output sold in a minute. Wages incurred. In the wages control, listen, you'll be writing 2 CLC. Wherever you see the word CLC, that will also come in normal P&L. That will also come in normal. Wherever you see the word cost ledger control, wherever you see the word ledger control. So 2 CLC account, 2 CLC account, 2940. We don't open a CLC account and all. And here 2 CLC account in FOH. In FOH 2 CLC account. 2 CLC 2940, 9550. Both items will come in normal P&L. Both items will come in normal P&L. 2 cost ledger control account 2940, 9550. 9550. Any doubts on this? Clear? This item here, 2 wages 2940, 2 FOH control, not to FOH, to factory overhead, that's all, no FOH control and all, 2 factory overhead 9550, normal P&L. Wherever you see cost ledger control, it will also come in normal P&L. It will also come in normal P&L. Any doubts on this? 2 more items which will come only in P&L, and these are reasons for variation in profit. Reasons for variation in profit, right? By income from investment, by income from investment 4 lakh, to loss on sale 8 lakh 40. These 2 items are reason for variation in profit as of now. There can be extra, but these 2 are reasons for variation in profit. Clear? Any doubts? Done. Now we will go in the order of balancing. First is raw material control. There should be an opening balance available. There should be a purchase available. There should be an issue to WIP available. By balance. By balance. By balance carried down. And take it to normal P&L also. By balance carried down, take it to normal P&L. By balance carried down, take it to normal P&L. in the normal P&L by closing raw material 35 lakh 28,000 by closing raw material 3528. Direct material done. Order says direct wages. Order says direct wages. Two mandatory payment transfer to WIP. Both are done. Is it tallying? No, not tallying means the gap is by FOH, indirect wages. By FOH control. By FOH control, indirect wages. Indirect wages. By FOH control, indirect wages. If nothing was there in the credit side, I would have written by WIP control entire 2940. Entire 2940 I would have written by WIP control. By WIP control entire 2940. So this is two FOH, sorry, two wages control. 4 lakh 20,000. 4 lakh 20,000. Wages control 4 lakh 20,000. Any doubts on this? Clear? And in the order, direct material done, direct wages done, direct expense not there, factory overhead. One entry for incurrence, one entry for absorption, differences under or over absorption, which whenever question asks reconciliation, you don't charge it to P&L. You don't charge it to P&L. What you will write by balance, just write by balance. I'll explain this in some time. By balance carried down. Under absorption carried forward. Under absorption carried forward. Carry forward means next year. I will not charge it to P&L. If I don't charge it to P&L, what happens? I'll explain in some time. But any question on reconciliation, you'll only carry it forward. You'll only carry it forward. It is some 20 lakh rupees. Under absorption carried forward 20 lakh rupees. Clear? Direct material done, direct wages done, factory overhead done, WIP. There should be a opening balance available, transfer from raw material available, transfer from wages available, transfer from overhead available. There should be a transfer to FG and closing balance. Listen, in these type of question, from WIP we shift to FG. From FG we shift to COS. From COS we shift to, in these type of question, when entire output is sold, I directly will write by costing P&L in bracket cost of sales. By costing P&L in bracket what? Cost of sales, and this will directly, or what I can do, by FG control, open FG control, write that in the debit side by COS. Then open a COS account, write that in the debit side by costing P&L. Ultimately, it'll go to debit side of costing P&L. Ultimately, it'll go to debit side of costing P&L. So here write by costing P&L in bracket cost of sales. By costing P&L, all this will not come in normal P&L. One crore 58 lakh 88,000. 1 crore 58 lakh 88,000. By costing P&L 1 crore 58 lakh 88,000. Clear? Done. Now in the costing P&L, to cost of sales. For sales, the question has given some information. Sales is at a profit of 12% on cost. 12% on costs. Entire output is sold at a profit of 12% on cost. So this into 1.1 to 12% extra. 12% extra into 1.12. You will record this in normal P&L also by sales. By sales. Normal P&L also we will record it by sales. Now I close this account to CLC account, profit for the year to CLC account. This is my costing profit, 19 lakh 6,560. Costing is 19 lakh 6,560. Costing 19 lakh 6,560. Financial is you can just be in listen mode. Loss here. Listen for some time. I don't want to write. 587 440 is the financial loss, and costing showed a profit. Three reasons for this. One is income from investment, second is loss on sale, and third is this item which we carried forward. In case I don't carry it forward, what would have happened? Listen, I would have returned to FOH control here. To FOH control 20 lakh 54,000. 20 lakh 54,000 would have come in this account to FOH control. Whenever reconciliation is there, we don't charge it. If you don't charge it, that is one more reason for variation in profit. That is one more reason for, and there have been exam question where that is the only reason for variation in profit. That is the only reason for variation in profit, because no other item was there. No other item was there. So 20 lakh 54, I don't charge it here, and my reconciliation, which you can do at home later on, key items. One is your factory overheads, 0 and minus 2054. What is minus 2054? Under absorption. Under absorption, which I did not charge. 840 and 0, 4 lakh and 0. 1960 is becoming 587, 440. 1960 is becoming. So, three types of reconciliation. One, they'll give you 10 reasons, find it. Second, you calculate first profit. You calculate second profit. And first profit is through normal P&L. Second profit through is a normal cost sheet, and find out the reason. Third is doing the profit calculation through the non-integrated accounting. Non-integrated accounting, which is stores ledger control, WIP control, FG control. FG may not be needed in many questions. They'll say from WIP directly take it to cost of sales. And this is one more, this is not a very different type of a question. The following information is available for the financial books. Find out the profit as per financial book. Very simple. This will go to credit side. This will go to, listen for some time, this will go to credit side, debit side, debit side, debit side, debit side, debit side, credit side, and this will give me financial profit. This will give me financial profit. Then I have to prepare a cost sheet. In cost sheet, be very clear. Whenever you have an item which is fixed in nature, we absorb the overhead. How do we absorb? For example, factory expense 1 lakh 50. 60% is fixed, which means 90,000 is fixed, and for every unit, my OAR is 1.5. For every unit, my OAR is 1. Fixed cost per unit is always misleading, but in this type of a question, you will get that number and absorb for the existing units. That will be under our over recovery. I'm not doing this question because of one time constraint, and it's a fairly simple question. But these 7 questions, if you practice in this chapter, it will be more than sufficient to kind of cover, unless it's a very, very tough paper. Recently, your Jan 25 MTP has come. Unfortunately, it's a very, very tough paper. Not sure why ICI has done that. That paper, even I solve, will take me 4 hours to complete that solving. So they have ended up asking extremely, extremely lengthy and tough questions. Not sure what was the objective of ICI in that paper setting. But that is a mock test paper. In case paper like that comes, you may find it challenging to answer. But normal your exam papers till now, I've seen all exam papers till now. Any kind of exam paper you pick and solve, you will be able to solve whatever chapters I've done. Whatever chapters I've done till now, any exam paper you pick it up and start solving, you should be in a position to handle, unless the paper is extremely tough. Even in that, if final paper comes very tough, I say normally the correction becomes little lenient. The correction becomes lenient in case they end up asking a very tough paper. I don't see that kind of a tough paper coming in exam. To cut it short, in this chapter, first practice all the journal entries once. Practice all the journal entry. What you need to do is you'll open the concept book and just hide the journal entry. Just hide the journal entry and keep telling the journal entry for every transaction. Just do that. Second, hide this mandatory entries and keep telling the mandatory entries. If this is done, chapter is over. And for reconciliation, I have this format: serial number, item, end book, start book, difference where the sign is written, debit is minus, credit is plus. I multiply and call it as action, and again the difference comes. Clear? Any doubts? This difference is basically amount, and the earlier difference is only for the sign. Clear? I have not done one reverse working question. I would want you to practice that question. Please practice that question. We'll take a break of 15 minutes and then I move to the next chapter. Okay, I'll now move to the next chapter. We are left with three more chapters. One is on joint and byproduct costing, operating costing, and standard costing. I'll be doing standard costing in the next session. But before that, there is one base work which you have to 100% do and come, else you will not understand anything of standard costing. The work is very simple. When you go to the concept book page 100, when you go here, you will see some notes and there is a link which is given here. You'll have to click this link. You will find 4 videos of around 15 minutes each, which will tell. There are 4 videos. In that, one video you can ignore. One is on sales variances, that you can ignore, that's not part of your syllabus. One video you will find on material variance, one video you will find on labor variance, one video you'll find it on variable overhead variance. The material variance video, see it first time, you understood, okay. You didn't understand, see it second, third, fourth, till you understand it. Once you understand material variances formula, everything else will automatically understood by you when you see labor formula and the variable overhead formula. This videos, if you see it properly, in standard costing, I don't expect you to remember even one formula. There are so many formulae in standard costing. If you see all the videos properly and come, you will not be required to remember even a single formula in variances. So then in the class, I will focus on solving the question rather than explaining the formula for the variances. So I just want you to do this. In case in a 15-minute video you're not getting clarity, then in my YouTube channel, you will find a separate playlist for standard costing, which is 15 hours. You need not see all that. In that video 1, the introduction video of standard costing, if you see, you will understand material variances properly. You will understand material variances properly in the first 1 hour. In the first 1 hour, you will understand it. Once that is understood, everything else is formality. Everything else will become formality. But again, I'm repeating, if you are not going through this part and I start explaining how standard costing is going to work, you will find it very difficult to grasp what I'm trying to explain. And this is very critical. So in the you have the soft copy anyway. There is the link is available. Click the link and then watch the videos. Watch the videos. Standard costing, mandatory. You don't need to make any notes. Nothing is needed. You just need to keep listening to the video till you get clarity. Till you get clarity. Now I go to one more chapter. I will do a smaller chapter, which is joint. Okay, which is joint product and byproduct. I'll be going to an area called as joint product and byproduct. In this chapter, we have only 2 important discussion points. One is a joint product is basically a situation where I use single raw material and produce 2 or more products. I'm producing 2 or more products using a single raw material. If these 2 products have almost same value, almost same value means one product is 40 rupees, another product is 25. Okay, they are called joint product. They are called joint product. If one product is 40 rupees, another product is 1 rupee. That 1 rupee product is called byproduct, and the 40 rupee product is called main product. The 40 rupee product will be called as main, and the 1 rupee product will be called as byproduct. So joint and byproduct costing is used in those industries where single raw material leads to manufacture of two or more products. If the product have equal economic significance, equal does not mean exact same value, but almost similar, they are called as joint product. If one of them is more important, for example, when you do sugar manufacturing, sugar can, when you use it, you get sugar. Along with that, you get something called as molasses. You get something called as molasses. Molasses is a byproduct. Molasses is a byproduct, and sugar is a main product. If their significance is different, higher economic significance is called main product. Lower economic significance is called byproduct. Now, why this is critical? When I'm using a single raw material, this is the raw material. I incur labor on this, I incur overhead on this. This keeps going. At some stage, you will see 2, 3 products coming. This point is called a split off point. The point at which you are able to see 2, 3 products. The point at which you are able to see 2, 3 products is called split off point. It's called what? Split off point. Any cost which you incur till split off is called joint cost. Is called joint cost, and any cost which you incur after that is called further processing cost. Any cost till that is called joint cost, and any cost after that is called further processing cost. Now, what we need to do is we have to distribute this joint cost. We have to distribute this joint cost to product A, B, and C. That is one major discussion in this chapter. So, the point at which two or more product emerge is called split off point. Cost incurred till split off point is called joint cost, and cost incurred after split off point is called further processing cost. The crux is how do you distribute this? The crux is how do you distribute? We follow 4 steps. First, we find out what is the joint cost. Second, we decide what ratio do I distribute. We have been learning about distribution in many places. Activity based costing, we distributed the cost. Even overheads chapter we distributed the cost. Primary overhead distribution, secondary overhead distribution. So distribution is always there. So here also we have distribution. That is, I have the cost, I have to distribute. You identify what ratio, distribute it, and this is my profit statement. Sales less further processing cost, share of joint cost, and I make profit. Now listen, a product can be sold at 2 stages. One is called split off, second is called after further processing. That is, I do sugar manufacturing, I can sell it as sugar, or after I get the sugar, I do something else and make it as a sweet, and I can sell it as a sweet or I can sell it as a sugar. If I sell it as sugar, I will not incur further processing cost. I will not incur further processing cost. So some question will say, prepare a P&L assuming you sell it split off. In that case, further processing cost is 0. In that case, further processing cost is 0 because you are selling it at what stage? You are selling it at split off stage. You are selling it at split off stage. And you can sell it at after further processing also. If you sell it at after further processing, then you will incur this expense. Now, what are the methods we have? First method is called physical measurement. The name of the method will give the answer. What is physical measurement is distribute on the basis of units produced. Distribute the cost on the basis of units produced. Calculate the cost, split in the ratio of 200 units, 300 units. That is called physical measurement method. Second method is called survey method. In survey method, what we will do is we will give certain weights. So, first product 200 units, second product 300 units. 2:3 is physical measurement. Survey method 200 into 10, 300 into 20, some weights you will attach and then calculate a ratio. Weights you will attach and then calculate a ratio. That is called survey method. That is called survey method. Contribution margin or marginal costing method. Under marginal costing, classify the cost into variable cost and fixed cost. Classify the cost into variable cost and fixed cost. Variable cost on the basis of units. On the basis of units. fixed cost, calculate contribution of the product. Calculate contribution. Whichever product has more contribution, more fixed cost. Less contribution, less. So fixed cost is distributed on the basis of contribution. On the basis of contribution. Next is sale value at split off. Sale value at split off means calculate the sale value at split off. That is the ratio to distribute. Sale value after further processing, calculate sale value after further processing, and that's the ratio. The name of the method will tell you what ratio we have to distribute. Sale value at split off means on the basis of sale value at split off. Sale value after further processing means on the basis of sale value after further processing, whatever the method name. Last is NRV method. Now, what do we do in NRV? This is one most important method. Under NRV method, the term NRV means net realizable value. What is net realizable value? Is my final sale value. Final sale value minus the cost incurred to complete manufacturing. Cost incurred to complete manufacturing, which is called further processing cost, minus cost incurred to complete. This is a definition in your accounting standard. The net realizable value as per your AS accounting standard 2 says inventory is to be valued at lower of cost and NRV. NRV is the final selling price minus the cost incurred to complete the sales minus the cost incurred to complete the product. So cost incurred to complete the product is further processing cost. Cost incurred to complete the sale is selling and distribution cost, and sometimes they may give profit margin also. If they give, subtract that also. Estimated profit margin. Estimated profit margin. Okay, one important decision we will be taking is, should you sell the product at split off or should you sell it after further processing? This is a very critical decision in most of the problem we are going to do. For doing that, I have to find incremental revenue. What is incremental revenues? If I sell after further processing, I will get 2 lakh rupees. If I sell it at split off, I get 1 lakh 50, which means extra 50,000 I can earn. Extra 50,000 I can earn by doing what? Further processing. But for doing further processing, I have to spend 60,000, which means extra profit is negative. This is not logical. I will not do further processing. I will not do further processing. I earn extra 50,000. I earn extra 50,000. But in order to earn that extra 50,000, I have to spend what? Extra 60,000. Extra 60,000. I am not going to do further processing. I am not going to do further processing. Okay, some of these points I'll explain later. Let's see a few questions and then I come back. Let's come to question 1. This is a very simple question. The following particulars are in respect of joint production of A and B for a month. Direct material, direct labor, variable overhead, fixed overhead, sales. Compute the profit or loss. I'm not going to do profit or loss calculation. I'm just going to distribute joint cost. Once I distribute joint cost, you will understand how to do profit calculation. Let's do joint cost. Right. Joint cost equal to, right. Question number 1. Joint cost equal to total of all of this. Joint cost equal to incurred for joint production. I've incurred this for joint production. Tell me the total of all of this. $12,000. Now, what we need to do is we have to distribute this to A and B. We need to distribute this to A and B. Method 1 is what method? Physical measurement. Physical measurement means 100 is to 150. 100 is to 150. So, first method, right? Joint cost of A, 12,000 into 100 by 250. 100 by 250. 100 is to 150. 100 is to 150. How much? And joint cost of B, 12,000 into 150 by 250. 7,200. 100 by 250 and 150 by 250, 4800 and 7200. This is first method. Very simple method. We have to just distribute on the basis of units. What you need to do then in exam situation, you will write sales less joint cost, sales less joint cost. So technically in the end I have to do this. I'm not going to do it. Sales less joint cost profit. When I do second method, A and B profit can change. Overall profit will remain same. A and B profit can change. Overall profit is going to remain same. In short, this method technically does not have any utility. Does not have any utility. Only thing is you should use the right method of distribution, which practically I'll have information to do it. In exam situation, some problems doesn't tell the method. I can randomly assume any method and proceed ahead. I'll assume any method and proceed ahead. So first method, 3200 profit, negative 1200 profit, negative 1200, overall profit is 2000. Next, second method is survey method or technical evaluation method. Survey method or technical evaluation method. Now write ratio is equal to, second method, ratio is equal to units into points, units into points, A, B, units into points. A, we have produced 100 units, points for that is 3, points for that is 3. B, we have produced 150 units, points for that is 2. 3 and 2 are the points. So ratio is 100 into 3 is 2. 150 into 2. Net 1 is to 1. 300 is to 300. So 6000 for A, 6000 for B. 6000 for A and 6000 for B. Very simple, straightforward calculation. 6000 for A and 6000 for B. Now, second method, in case you had done, this is the profit. A's profit is 2000, B's profit is 0, overall 2000. Overall 2000. Overall profit cannot change. Overall profit cannot change. A's profit is 2000, B's profit is 0. Next comes contribution margin or marginal cost method. For this, I have to do a P&L. I'll have to do a P&L. First, we classify the cost into variable cost and fixed cost. Of the 12,000, direct material is a variable cost, direct labor is a variable cost, variable overhead is a variable cost, fixed overhead is a fixed cost. So write 12,000 and split into 2. Variable joint cost, fixed joint cost, 10,000, 2,000, 10,000 and 2,000. Clear? Variable split into 2, A and B in the ratio of units. A and B in the ratio of units. Physical measurement. A and B in the ratio of units. 100 is to 150 or 2 is to 3. 2 is to 3. 6,000 and, sorry, okay, 4,000 and 4 and 6. Any doubts in this? Any doubts in this? Now what you need to do, listen only, no need to write. Here, sales 8, 6, 14. 8, 6 and 14. Variable joint cost 4,000, 6,000, 10,000. Contribution 4, 0 and 4. Whatever fixed is there, distribute in the ratio of 4 is to 0. Distribute in the ratio of 4 is to 0, which automatically means nothing will go to B. Nothing will go to B. If contribution was 3,000 and 1,000, 3,000 and 1,000, split in the ratio of 3 is to 1. In this scenario, very rare, one of the product can have negative, Negative means don't distribute anything to that product and distribute everything to the other product. Here we have a 0. Here we have a 0. So fixed cost will go us 2,000, 0, 2,000. Overall profit is still. My overall profit cannot change. My overall profit cannot change. So here I distributed, I got contribution. In the ratio of contribution, I have to do the distribution. One thing which can happen is sometimes one product can have a negative contribution, then fixed cost will not be distributed to that product. Fixed cost will not be distributed. Even zero is there, we will not distribute it, and negative also there, we will not distribute it to that product. Clear? Any doubts in this? Okay, next question number 2. X company limited manufactures two products A and B and sells them at 170 and 260 per unit respectively. During a particular period, 200 of A, 200 of B is sold. Joint cost 64,500. Further processing cost 4,032. Product can be processed further and be sold at 200 and 300 respectively. Now, please understand few points before I start doing this. A product can be sold at split off. A product can be sold at split off. Joint cost can be distributed based on further processing value. There is no link between the two. I can sell my product at stage 1 or stage 2, and I can distribute my cost based on stage 1 values or stage 2 values. That's my wish. Both have no linkage. Many students try to link them together. In this question, it says manufactures two products and sells them at 170 and 260. The product can be processed further and sold at what rate? 200 and 300, which means today we are selling it at this stage. This stage is called, and this 200 and 300, the higher value is called further processing. And the question is saying you prepare a profit statement distributing the cost on the basis of sale value at split off, on the basis of sale value after further processing, on the basis of NRV method. Many students in their mind somewhere they make a mindset that if I distribute on sale value after further processing, it means I'm selling after further processing. No, there is no linkage. There is no linkage. You can sell at split off. You can distribute cost based on split off, based on further processing, based on NRV, based on physical units, based on contribution margin, based on technical evaluation. Any method you can follow. Any method you can follow. In this question, my sales will be 200 into 170, 200 into 260, whichever method you follow for distribution. Whichever method you follow for distribution, because I am today selling it at 170 and 260. If that happens, my further processing cost in my P&L will be zero. My further processing cost will be zero because I'm selling my product at what stage? At the split off stage, and not after further processing. Not after further processing. Let's do all the three statements so that you get full clarity. Now, write method 1, sale value at split off. Method 1, sale value at split off. Sale value at split off. Sale value at split off method. I have 4 steps. Step 1, find the joint cost. Find the joint cost. Find the joint cost. In this question, joint cost is 64,500. Step 2, find ratio of distribution. Ratio of distribution. Which method are we following here? Sale value at split off, which is 200 into 170 is to 200 into 260. 200 into 170, that is the sale value at split off, and 200 is to 200 into 260. So the ratio is 200 into 170 is to 200 into 260, or 17 is to 26. 17 is to 26 is my ratio. (17 is to 26), or you can even write it as 34,000 is to 52,000. Doesn't really matter. Clear? Step 3, distribution of joint cost. distribution of joint cost. Joint cost of A equal to 64,500 into 17 by 43. 17 is to 26. 17 is to 26. 17 by 43. How much? 25,000. Joint cost of B, 26 by 43. 39,000. Step 4, profit statement. Step 4, profit statement. Particulars, product A, product B, total. A, B and total. Product A, B and total. Sales. See, sales will mean when are you selling it? It could be at split off, it could be after further processing. Don't link it with the method. My sales is today happening at split off because it says I'm selling it at 170 and 260. I'm selling it at 170 and 260. The product can be processed further. Can be means it could have been done. It could have been done. So 200 into 170, 200 into 260 sales. 200 into 170, 200 into 260 less share of joint cost. Share of joint cost. Share of joint cost. We just now calculated how much? 25,500 and 39,000 less further processing cost not applicable. I'm not selling after further processing. I'm not selling after further processing. I'm selling it at split off only. I'm selling it at split off only. That's my wish. I can sell it whenever I want. Question has said I'm selling it at split off. They gave me data. I'm happy to look at the data, but I'm not doing that. I'm not doing that. This gives me my profit. Profit is overall profit is 21,500. I'll change the method. Overall profit will still remain 21,500. Overall profit will still remain 21,500. Clear? This is first method. Method 2, sale value after further processing. Sale value after further processing. In this method, the ratio of distribution will change. Ratio of distribution will change. Step 1, find the joint cost 64,500, right? Step 1, find joint cost 64,500. Find the joint cost 64,500. Step 2, find ratio of distribution. Step 2, find ratio. The ratio will change. What I've written there is the split of ratio. It will change now. Step 2, find ratio of distribution. In the question, sale value after further processing is 200 units into 200 rupees. 200 units into 200 rupees and 200 units into 300 rupees. 200 rupees and 300 rupees. So the ratio will change. 200 into 200. 200 into 300. Net it is 2 is to 3. 2 is to 3. The ratio will undergo a change. 2 is to 3. 200 into 200 and 200 into 300. You'll get 2 by 5. What's the number you get? 25,800. 3 by 5. 38. Now listen, most important part. This is where students make a mistake. They suddenly change the sales value here. No, you cannot change the sales value. You are just changing the method of distribution. Company continues to sell it at what stage? At split off stage. For distribution, I'm using sale value after further processing. They suddenly think now the sale value after further processing. No, sale value is sale value at split off only because I'm selling it at split off. No need to write this, listen only. Minus 25,800 minus 38,700. Individual profits are changed. Overall profit would still remain same. Overall profit would still remain same. Further processing cost is not applicable only because I'm not changing my decision. Suddenly the question can say recalculate the profitability statement if you're selling after further processing. Then I'll bring it. Any doubts on this? Any doubts? Clear? Next method, NRV method. Method 3, NRV method. Step 1. Step 1. Find joint cost 64,500. Find joint cost 64,500. Step 2, ratio. This is a very important method. NRV will keep getting tested in exam. Even in the recent MTP, they had asked NRV. Will calculate. NRV formula is sale value after further processing. The formula is sale value after further processing less further processing cost less selling cost less estimated profit. This is how NRV is calculated. Sale value, the final sale value after further processing, deduct further processing. The reason for giving further processing cost is to calculate NRV here, is to calculate the NRV. So, sale value after further processing, less further processing cost. If any selling cost is there, subtract it. If any estimated profit is given, subtract it. That is called net realizable value of the product, and that is the ratio to distribute. That is the ratio to distribute. What is the sale value after further processing? 40,000, 200 is selling price, 40,000 and 60,000, 40,000 and 60,000. Sale value after further processing 40,000 and 60,000. Further processing cost 4,000 and 32,000. 4,000 and 32,000. This is the NRV. Please distribute 64,500 in the ratio of 36 is to 28. 64,500 divided by 64 into 36 into 28. Distribute in the ratio of 36 is to 28. In the ratio of 36 is to 28. Thirty-six to 81, 28 to 19. 36 to 81, 28 to 19. 28 to 19. If I substitute this, profit of A will change, B will change, overall will still remain same. Overall is going to remain same. Overall profit cannot change. Clear? Any doubts on this? So to cut it short, again I'm explaining. Joint cost can be distributed based on split off method. Product can be sold after further processing. Product can be sold at split off. Joint cost can be distributed based on further processing value. Depends on what the question gives. Any doubts on this? Any doubts on this? So in the first statement, 21,500 profit. Second statement, 21,500 profit. Third statement, 21,500. Third statement is also 21,500. The individual profits are different. The individual profits are different. Any doubts on this? Clear? Let's look at question 3. In a chemical manufacturing company, three products A, B, and C emerge at a single split off stage in department P. Single split off stage in department P. What does mean is any cost you incur in department P is joint cost. Any cost you incur in department P is joint cost. A is further processed in department Q. Any cost incurred in Q is A's A's further processing cost. That is the A's further processing cost. Product B is further processed in department R. So any cost you incur in department R is B's further processing cost, and C is further processed in department S. There is no loss in further processing. Cost of raw material introduced in department P. This is part of joint cost. Department P cost is part of joint cost. Then direct wages of department P. Direct wages of department P, again part of which cost? Joint cost. Department Q, A's further processing cost. Department R, B's further processing cost. Department S, C's further processing cost, and factory overhead is to be apportioned on the basis of direct wages. That is this 4,72,000. Please distribute it here. You have to distribute these two: P, Q, R, and S. P is joint cost. Q is A, B, and C. During the month, the company sold all the three products after processing them further. All the three products after processing them further. There is no opening or closing stock. If these products are sold at the split off stage, that is without further processing, the selling price will be 20, 22, and 10. They are saying if you had sold it at split off, it's 20, 22, and 10. Prepare a statement showing the apportionment of joint cost to the three products. They have not given any method name. Anything can be followed. Anything can be followed. Obviously, you change the method name, the cost can change, but overall profit will remain same. Overall profit is going to remain same. Prepare a statement showing product wise and total profit as per current processing. Current processing is to sell it after further processing. What decision can be taken to improve the profits? That is, for every product, I'm going to check, should I sell it split off or should I sell it after further processing? And whatever I recommend, again prepare another profit statement. This is a full comprehensive question on joint and byproduct costing, where first we'll have to distribute the cost, then decide on further processing, then prepare a revised P&L. The method name is not given in the question. I can follow any method. Let's first calculate department P, Q, R, S cost. Department P is joint cost. Q is A's FPC, R is B's FPC, S is C's FPC. Working note 1, computation of cost, right? Computation of cost. Particulars. Department P, Q, R, and S. Department P, Q, R, S. Direct material. Direct material. Direct material. 12,68,800 in department P. 12,68,800. 12,68,800 in department P. Direct wages 384, 96, 64, 46. Direct wages. Then factory overhead is 4,72,000. Put a total and distribute. 472 divided by, I think, 5,90,000 into 4,72,000 divide by 5,90,000 into the respective wages. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . distribute to the various department. 4,72,000 divided by 5,90,000 into the respective total cost. Total cost total cost Now, nature, this is joint cost. This is A's FPC, B's FPC, C's FPC. A's further processing cost, B's further processing cost, and C's further processing cost. Clear? Now, I need to distribute 1960. Method is not mentioned in the question. I don't know what is there in the solution. I am following physical units method. That's my wish. I'm following physical units method to distribute the joint cost. I think solution, I remember sale value at split off, but I don't want to look at, because in the end I want to show you whichever method you follow, it is fine. If problem is silent, you can't do much about it. All right, it is assumed company follows physical units method for distribution of joint cost. Physical units method for distribution of joint cost. Physical units method for distribution of joint cost. Ratio of distribution 44 is to 40 is to 20. 44 is to 40 is to 20. 44 is to 40 is to 20. Do the calculation right. A's joint cost 19,60,000 divided by 104 into 44. Forty-four, 40, and 20. 19,60,000 divided by 104 into 44 equal to 40 equal to 20 equal to 19,60,000 divided by 104 into 44 equal to 40 equal to and 20 equal to. Clear? Any doubts on the ratio of distribution? Done? Clear? Then profit statement. Particulars A, B, C, and total. Sales less, this is the format, share of joint cost, further processing cost, profit loss. Sales, share of joint cost, FPC, profit or loss. It's a purely format driven chapter. Share of joint cost, further share of joint cost is there in your notebook. I'm just first copying all these numbers: 829,231, 753, 846, 376, 923. Further processing cost is also there in your notebook: 172, 800, 115, and 82. 172, 115 and 82. 172, 115 and 82. It's there in your notebook. And we are selling the product after further processing here. We're selling the product after further processing. We're selling the product after further processing. So sales values are given in the question. 44,000 units into, right, 44,000 into 32. Into 32. 40,000 into 24. 20,000 into 16. Complete this table. Clear? Any doubts on this? Done? Now, this statement can change in case C is making a loss does not mean I cannot further process and all. This statement just indicates that A is profitable, B is profitable, C is loss making. All this is of no use. Overall, company is making money. You change the method A, B, C, profit can change. This is part 1 and part 2 of the question. Statement showing apportionment, statement showing product wise and total profit. Next is what processing. Processing decision is should you sell at split off or should you sell after further processing. Next, working note 3, decision on further processing. Decision on further processing. Decision on further processing. Particulars A, B, C. Decision on further processing, for which I had shown a format earlier when I was explaining the base theory. Decision on further processing. Sale value after further processing less sale value at split off, and this is called incremental revenues. Sale value after further processing less sale value at split off. Less sale value at split off. And the gap is called extra revenue. The gap is called extra revenue. How much extra are we going to earn? Sale value after further processing is whatever we wrote earlier. Whatever we wrote earlier was sale value after further processing. 1408, 960 and 320. 1408, 960 and 320. Sale value at split off is I could have sold them at 20 rupees, 22 rupees and 10 rupees. 20 rupees, 22 rupees and that is 44,000 into 20, 40,000 into 22 and 20,000 into 10. This is an option which was there. Which was there. So 44,000 into 20 minus 44,000 into 20, 40,000 into 22 and 20,000 into 10. 20,000 into 10. This is the gap is the extra income of mine. The gap is the extra income due to further processing. The gap is the extra income due to further processing. And I subtract here less incremental cost and incremental profit or loss. Incremental cost is nothing but further processing cost. Incremental cost is FPC, further processing cost, less incremental cost, which is further processing cost, which we earlier had calculated. The gap is extra profit or extra loss due to further processing. The gap is extra profit or extra loss due to further processing. If you make extra loss, don't process it further. Don't process it further. And if you make extra profit, process it further. If you're making extra profit, process it. Extra loss, don't process it. Product A profitable, B loss making, C profitable. Extra profit. It is generating extra profit. Now, in the end, right, decision. First one is sell after further processing. Sell after further processing because it is profitable. It is giving me, I did not go by the earlier profit number. That is of no use to me. I only want to know incrementally are we making profits or are we making losses. Product A sell after further processing. Product B sell at split off. Sell at split off. Sell at split off. Third product sell after further processing. Third product sell after further processing. Clear? Now listen, the last statement you need not do. You have to repeat this table now. What will happen is in this table, just give me a minute. This is the statement which we did earlier. This is the statement which we did earlier. In that, A, I don't change anything. B, I have decided to sell at split off 8 lakh 80. I have decided to sell at split off 8 lakh 80 and FPC will be 0. FPC will be 0. I have decided to sell at what stage? At split off. So FPC will be 0. Overall profit from the last time is going up by 35,200, which is basically this amount which you are saving now. You are saving. Some question will say, what will be the impact on profit? Without even doing statement, I can say my profit will go up by 35,200. Profit will go up by 35,200 because I'm stopping that mistake. I'm stopping the mistake which has happened and I'm selling it at what stage? At the split off stage itself. Now, if you look at the printed solution, method followed here is sale value at split off method, nothing to worry about. Overall profit was 357 for us. Individual profits would have been different. Individual profits would have been different. This decision table would have remained same for us also. Would have remained same. And in the revised statement, overall profit is 392. Overall profit is 392. Here also overall profit is 392. Overall profit is 392. I'm repeating again. You can follow any method you want to. In case clarity is not there, I don't have a choice. I cannot say that follow this method. I knew what method they had followed in the solution, but I cannot tell you that follow this method without giving you any logic for it. So any method can be followed. First, you will do a statement which is for these product. So this product is making a profit of 357 200. Decision on further processing is very, very important. What you do in decision on further processing is you write sale value after further processing, deduct sale value at split off, get the incremental revenue, subtract incremental cost and make incremental profit or loss. If incremental profit is there, sell after further processing. Incremental loss is there, sell at split off. Any doubts on this? This is one variant of the question. One is distributing the cost, doing existing statement, making a decision, doing a revised statement. In this, what can happen is question can have opening stock and closing stock. Opening stock and closing stock. What impact does it have? You will understand now. So sales not equal to production. Sales is not equal to production. If units sold are not equal to units produced, it will indicate what? Closing stock. In this case, I have to calculate per unit numbers. I'll have to calculate per unit numbers. Why I have to calculate per unit numbers is, let's assume joint cost is 2 lakh rupees. In my P&L, I cannot write joint cost 2 lakh because what I will write in P&L is 2 lakh divided by units produced into the units sold, Balance will go as closing stock. Balance will go as closing stock. So in case there is a stock in a question, in case there is a stock in a question, every number which we got, share of joint cost per unit, further processing cost per unit, decision on further processing also at a per unit level. Everything we will do at a per unit level, and whatever the question is asking, exactly the same thing. I'm going to do it. I think you need not do this because you have understood the crux. Let's see it here. A company processes a raw material in department 1 to produce three products A, B and X, to produce three products A, B and X at the same split off stage during a period 1,80,000 kgs. 1,80,000 kgs were processed at a total cost of joint cost, at a total cost of 12,88,000, which is the joint cost, and I have produced 18,000, 10,000 and 54,000. 18,000, 10,000 and 54,000. A and B are processed further. A and B are processed further 1,80,000, 1,50,000. X is processed further 1,08,000. So last question I had to do all the calculation. Four numbers are directly available. Joint cost 1288. A's further processing cost 180. B's further processing cost 150. X further processing cost 1,08,000. I produced 18, 10 and 54. I have sold 17, 5 and 44. I have sold what? 17, 5 and 44, which means there is a closing stock. Which means there is a closing stock. And this is the question as itself said, calculate per kg, but it's not mandatory. The question may not say calculate per kg. First thing we have to do is distribution of joint cost, which I'm not going to explain in detail. I have 12,88,000. I have to decide method. I have to decide method. Method could be units produced. Method could be units produced. Solution is following: sale value at split off method. Sale value at split off method. We have distributed 630, 280 and 378. 630, 280 and 378. Whichever method we follow, that doesn't really matter. Now, the question is saying prepare a statement showing the cost per kg of each product, indicating joint cost, FPC and total cost separately. Statement showing product wise and total profit with supporting calculation whether all or any of the products should be further processed. This requirement, even if they don't give, I have to do it. I have to do it at per unit level. Now you've been listen more. Particulars and three products we have. Particulars ABX. First is share of joint cost. Share of joint cost, which I'm copy pasting: 630, 280, 378. 630, 280 and 378. I have to divide this by number of units. I have to divide this by number of units, which is 18, 10, 54. 18, 10 and 54. This will give me JC per unit, joint cost per unit. Why? Where will I use this? Whatever units I'm selling, I'll multiply with JC per unit to calculate cost of goods sold. To calculate the cost of goods sold. So JC per unit is 35, 28 and 7. 35, 28 and 7. Then similarly, further processing cost, which is given in the question. Further processing cost given in the question is 180, 150, 108. Number of units, FPC per unit, FPC per unit, and total cost per unit, 45, 43 and 9. Now the main difference is this table. When I prepare my profit statement, earlier I was writing share of joint cost as it is. Now you cannot do that because you have not sold it fully. So what I will do here, listen. Key products ABX. Sales given in the question for how many units? 17,000. Sales is for 17,000. So joint cost will be 17,000 into 35. 17,000 into 35, and further processing cost will be 17,000 into 10. 17,000 into 10. 35 and 10 are the numbers for the first product. 35 and 10 are the numbers for the first product. 17,000 into 35, 17,000 into 10. You cannot, if everything is sold, then no need to do per unit, directly copy paste 630 and 180. Second product, 5,000 into 28, 5,000 into 15, 5,000 into 28 and 5,000 into 15. Third product, 44,000 into 7, 44,000 into 2, 44,000 into 7 and 44,000 into 2, and sales is given 1224, 250, 792. This gives me the profit of every product. Decision on further processing, which has been asked. The question is saying, state whether all or any of the products should be further processed or not. That also at a per unit level. How will I do at per unit level? Selling price. Can you tell me 12 lakh 24 divided by 17,000? 1224 by 17,000. This is per unit selling price after further processing. If you sell at split off, it says 50. If you sell at split off, it says 50. So 72 minus 50. 22 is incremental revenue per unit. Incremental cost is 10 rupees. Incremental profit per unit is 12 rupees. All calculations will have to be done at a per unit level. So see here, 12 rupees extra profit, 5 rupees loss, 6 rupees extra profit, sell after further processing, sell at split off, sell after further processing. Clear? Any doubts in this? Okay. Okay. Question 5 alone, I want you to practice it at home. Maybe in the next session I may discuss. I'm yet to do byproduct costing. 5 has something called as processing loss. So you'll have to do with some input output statement analysis. You attempt it at home. I will discuss it if time permits in the next session. Else I'll be moving to byproduct costing, and after that we'll move to standard costing. Most probably one chapter will not be able to do, which is operating costing, for which the videos are already available in my YouTube channel. So next session when I do, I'll first complete the joint and byproduct costing, where some more concept and byproduct costing is pending. And that one question is pending. If possible, attempt it. If you're not able to get it, anyway, I'll discuss it. And then I'll complete byproduct costing. I move to standard costing. For that, please watch those videos. Please watch the videos and come. We'll complete standard costing in the next session. It's again 2:30 to 5:30 only next session. But not tomorrow, Monday. But in that session, in case my standard costing is not getting over, I may stretch it little bit. So that I complete standard costing. Operating costing part, I'll give a video to you. Clear? With this, I'll end the session. Okay, let's continue with the discussion. In the previous session, we were doing joint and byproduct costing. I'll quickly again discuss the concepts and the pending concepts. Do 2-3 questions which is pending, and then I move to standard costing. Now, getting back to joint and byproduct costing, we learned that joint and byproduct costing comes into picture when I use a single raw material and produce 2 or more products. The stage at which you get these 2 or more products is called split off point. Any cost which you incur till this is called joint cost, and any cost which is incurred after this is called further processing cost. The crux of this chapter is how do you distribute the joint cost to the various joint products or joint product and byproduct, that is byproduct and main product. How do you distribute this cost? In that, the joint product distribution I've already discussed. Today I'll be discussing on the byproduct side as well. Now, we learned that there are 4 steps we will follow. First, you will have to identify the joint cost. Then a ratio of distribution. The ratio depends on the method name. There can be a physical units method where it is distributed on the basis of units. Survey method where it is units into points. Contribution margin method, where I distribute the cost as, or I differentiate the cost as variable cost and fixed cost. Variable cost on the basis of physical units, fixed cost on the basis of contribution of the product. Sale value at split off, where you distribute on the basis of sale value at split off. Sale value after further processing, where you distribute on the basis of sale value after further processing. And NRV method. NRV method means based on NRV, and NRV is equal to sale value after further processing minus cost incurred to complete the manufacturing, called as FPC, further processing cost, minus cost incurred to complete the product, that is technically, sorry, cost incurred to sell the product, that is selling and distribution cost. And if any estimated margin is given in the question, you will have to subtract that also in the NRV calculation. So identify joint cost, identify ratio of distribution, distribute joint cost, and prepare an income statement. A product can be sold at split off, a product can be sold after further processing. If you sell at split off, FPC will be not applicable. FPC will be not applicable because I'm selling the product at the split off stage. These are the methods I said: physical measurement, survey, contribution margin, sale value at split off, sale value after further processing, and NRV method. And this is the format we are going to use to decide whether I should sell my product at split off or after further processing. I compare two values: sale value after further processing less the sale value at split off, and this gives me incremental revenue. This gives me incremental revenue. I deduct something called as further processing cost. I deduct something called as further processing cost, and I get incremental profit or loss. If there is an incremental profit, sell after further processing. There's an incremental loss, don't sell it. So questions will tell you, they'll give you some information and say, please distribute the cost. Method name may not be given. Any method you take, distribute to the various product, prepare an income statement. Then they'll say, any changes in decision is needed, then you have to check this table: sale value after further processing less sale value at split off, incremental revenue, incremental cost, incremental profit, and then re-prepare another P&L. Then re-prepare another P&L. In case there is a negative contribution, which is a rare scenario, but if you get negative contribution under physical units method, under the contribution margin method, then the fixed cost will not be distributed to that negative contribution product. If it's fixed cost, there will not be any distribution. There will not be any distribution. It will go only to the product which are profitable, If sales is not equal to production, this got tested in the recent exam also, or in the recent MTP. If sales is not, so what they did is they gave sales and they gave closing stock. They gave closing stock in the question. Sales plus closing stock is production. Or what they can do, they can give production and sales. Production minus sales is closing stock. Production minus sales is closing stock. In case there is a closing stock or production is not equal to sales, you will have to do per unit calculation. Next point is decision on further processing is asked. What is decision on further processing? That is sale value at split off, sale value after that comparison we do. And if there is a selling expenses, in a question, and the problem is asking decision on further processing, then you cannot do that short format. You have to prepare a profit statement if the product is sold at split off, another profit statement if the product is sold after further processing, and see the difference. Whichever makes more profit, that is the decision we are going to take. In case of product specific selling expenses, we cannot use normal format, comparing incremental revenues with the incremental cost. To decide, we should prepare a profitability statement if product is sold at split off, another profitability statement if it is sold after further processing. Share of joint cost of product A is 10 lakh. Product can be sold for 20 lakh at split off, and selling expenses 2 lakh. So if you sell at split off, 20 minus 10 lakh minus 2 lakh, 8 lakh is my profit at split off. Product can be processed further. And you can sell it for 45 lakhs. 45 lakhs. In this case, now my selling expenses 5 lakh. 5 lakh. Joint cost will continue to be 10 lakh. How much can the further processing cost be, so that I'm indifferent between split off or after? Indifferent means at split off same profit, after further processing also same profit. Indifferent basically means to me both are equal. To me both are equal. So in that case, I copy paste the same profit and further processing cost is balancing figure. Further processing cost is balancing figure. To cut it short, you cannot use that short format. What is short format is incremental revenue, incremental cost. That approach will not work in case there are product specific selling expenses. In case there are product specific selling expenses. Another variant which ICI tested even in the recent exam is loss in processing. What is loss in processing is if I sell at split off, I can sell 1,000 units. So 1,000 into 20 is my sales. But if I sell after further processing, I'll sell it at 40, but it will be only 800 units. It will only be 800 units. Reason for 800 is there is a 20% loss in processing. There is a 20% loss in processing. In the recent exam, they said there is a 2% loss in processing. So you need to consider the loss in processing. You need to consider the loss in processing. At split off, you will sell different units. After further processing, you will sell different units. In case of loss in processing, we should prepare an input output chart. We should prepare an input output chart indicating units produced and loss. I'll show you an example. A company has introduced input of 1 lakh 50. The loss in the process is 5%. The loss in the process is 5%. So of 1 lakh 50, 7,500 is loss. 7,500 is loss. And the output of A and B, and the output of A and B is in the ratio of 1 is to 2. So I got 140 to 500, and the ratio is 2 is to 1. So 1 is to 2. 47 500, 95,000. 47 500 and 95,000. Then it says a proposal is available. All this is different story. Basic thing is you have to do something like this. You have to do an input output statement in case there is a loss. The question will further say A will have a loss of 10%, B will have a loss of 5%. Some analysis will be there. You will have to prepare an input output chart to exactly understand how many units have been produced by the company, and then balance analysis remains same. I think I have one question on this. I'll do it when I discuss it. Estimated margin given in question. Any problem, if they give any estimated margin, you have to follow NRV method for joint cost distribution. You have to follow NRV method for joint cost distribution. I've been telling that which method to follow is silent, but in case there is an estimated margin, NRV method of joint cost distribution will come into picture. Okay. Constant gross margin percentage. Now, what is constant gross margin percentage? Is the profit margin of the two products which we have, or three products which we have, should be same. How will it happen? Listen. A is sold for 1 lakh, B is sold for 2 lakh. 1 lakh, 2 lakh, overall number is 3 lakh. Overall number is 3 lakh. Then it says further processing cost is 40, 60. 1 lakh rupees the further processing cost. Joint cost is 1 lakh 10. This joint cost, I don't know how much should go to A, how much should go to B. Under constant gross margin, write A, write B, total. Sales less share of joint cost, less further processing cost, less selling and distribution. Overall profit is 90,000. Overall profit is 90,000. Overall margin is 30%. Overall margin 30% is 90,000 divided by 3 lakh. 90,000 divided by 3 lakh. If overall margin is 30%, A should also have 30% profit. B should also have 30% profit. A should also have 30% and B should also have 30% profit. So A's profit has to be 30,000. B's profit has to be 60,000. Share of joint cost is balancing figure. Share of joint cost is balancing figure. There was one exam problem where the share of joint cost became negative, which means I'm adding the cost and increasing the profit. Basically, 1 lakh is the first number, minus 40, overall profit has to be 70,000. Now, how can it be 70,000 if share of joint cost is negative? It's a very rare scenario, but constant gross margin percentage method basically means I need same profit margin. I need same profit margin for both the product. Last part of the chapter, accounting for byproduct, which is also very frequently tested. Now, what is byproduct is something which has lower value. Now, when I manufacture sugar, along with molasses comes or bagasse comes, which has lower value, We say it is a byproduct, and first main product is there. Now, what accounting is saying is, whichever product you are manufacturing, please consider its total sale value. Please consider its total sale value, and then you decide. You decide. See, on an individual basis, sugar is 50 rupees, molasses 1 rupee. Then you said molasses is a byproduct. But sugar, when I manufacture 1 kg, molasses, I get some 20-30 kg. I get a huge quantity of molasses and I get a very less quantity of sugar. So concept says you calculate the overall sale value. If it is significant, you can treat that product like a main product itself. You can treat the product like a main product itself and do joint cost distribution under the 6 methods which we learned. If you decide, no, value is not very high, I want to treat it as byproduct, then the treatment comes. So first is decide whether it is a byproduct or joint product. Decide whether it is a byproduct or joint product. If product does not require further processing, decide on the basis of sale value at split off. And if it requires, that is the byproduct require further processing, decide on the basis of NRV. If the value is considerable, it is like a joint product. And if it's not considerable, it is a byproduct. Now, if you treat it as byproduct, then only my next discussion. If it is a joint product, then discussion is over. Go back to the earlier segments of the chapter and treat it. Whenever our problems is, we treat it as byproduct. If you treat it as byproduct, two choices. Either record it in the credit side of P&L or reduce it from the debit side of P&L or reduce it from the debit side. What is recording in the credit side? Recording it as other income. What is reducing it in the debit side? From your joint cost. Reduce from your joint cost, reduce the sale value or the NRV. Reduce the sale value or the NRV. Sale values if it doesn't require further processing. NRV means if it requires further processing. Normally what we do, this is the treatment. We will calculate NRV of byproduct and deduct the same from the joint cost. Balance joint cost will be distributed among various products which are there. Balance joint cost will be distributed among the various products. This is what most of the exam question treatment will be. You will calculate NRV. How do you calculate NRV? Sale value less further processing cost, less selling and distribution cost, less estimated profit. In fact, what we do is we'll prepare an income statement. I'll write sales, less further processing cost, less selling and distribution cost, less share of joint cost, and profit. Profit will be given in the question. Share of joint cost will become like a balancing figure. You'll understand when we do a question, but concept is very simple. First, you have to decide whether it is a joint product or a byproduct. This can come as a theory question also. What is the accounting treatment of joint products? And so what is the accounting treatment of byproduct? What is the accounting treatment? You have to first decide whether it is a considerable value or not a considerable value. Not a considerable value, record it in the credit side of P&L or reduce it from the debit side of P&L. Record it in the credit side, that is record as other income or deduct it from debit side. Debit side is deducted from cost. Clear? Any doubts on this? Okay, let's come to this question 5, where 2-3 concepts, I think I had told you to try it, but anyway, I'll explain it. Here, those 2-3 things. One, if you have selling expenses, you have to do a separate statement, and loss analysis will be done. SV Limited processes 9 lakh kgs of raw material, 9 lakh kgs of raw material in a month at rupees 95 per kg in department X. 95 per kg in department X. The input output ratio is 100 is to 90. The input output ratio is 100 is to 90. You can write along with me. 9 lakh. As I read, I'll explain it. 9 lakh raw material. Loss and output. I introduce 9 lakh kgs. Input output ratio is 100 is to 90. Input output ratio is 100 is to 90. That is, you will get only 90 units output, 10 units loss. So loss is 90,000. Output is 8 lakh 10,000. Output is 8 lakh 10,000. I added 9 lakh units. I got a loss of 90,000 and output of 8 lakh 10,000. Input output ratio is 100 is to 90. 100 is to 90 would indicate that 100 units of raw material, 100 is equal to 9 lakh, 90 is equal to output. Processing of the material results in two products, P1 and P2, in the ratio of 60 is to 40. So whatever you got split into two, P1 60-40 ratio, P1 and P2 in the ratio of 60 is to 40. P1 is 4 lakh 86,000. P2 is 3 lakh 24,000. P1 and P2 in the ratio of 486 and 324. 486 and 324. Then they are saying product P1 can be sold at split off or be processed further in department Y. Product P1, if you want, you can sell it at split off or process it further and sell it as what product? YP1, which is nothing but P1 is the name at split off, YP1 is the name after further. It's the same product. It is the same product. The input output ratio is 100 is to 95. So this 486, if I decide, can become loss, 5% loss. Tell me how much? 486, 5% loss. And you can get YP1, 95%. YP1 you can get 95%. How much? 4 lakh? 4 lakh 86 if I use, 5% is loss and 95% is processed product. 95% is YP1 which I can get. Any doubts on this? Then it says department wise utilize only for further processing. So this total is further processing cost. This total is further processing cost. Department wise only utilized for what purpose? Converting the P1 to YP1. Converting the P1 to YP1. And department X, 9 lakh into 95 is how much? 9 lakh into 95. 9 into 95. 855. 9 into 95. Let's keep it as 9 into 95. 850. Sorry? That is why 855 lakhs. 855 lakhs plus another 350 lakh. Plus another 350 lakh. 855 lakh plus another 350 lakh is the department X expense. 855 lakh plus another 350 lakh is department X, which is the joint cost. Which is the joint cost. So how much is the joint cost? 855 plus 350. 1,205. Now I need to distribute this 1205 lakh cost. I need to distribute this 1205 between P1 and P2. The name of P1 can become YP1 if I want. The name of P1 can become YP1 if I want. There is a selling expense for the three product. Whenever selling expenses are there, we will not use that shortcut format to decide whether to sell it at split off or after further processing. Selling price of P1 and P2 is 110 and 325 and YP1 is 150. That is, I can sell this for 110, right, into 110. First product P1 can be sold at 110. This can be sold for 325. If you put the proper diagram, everything is in place, into 325, and this can be sold for 150. This can be sold for 150. With this, problem is over. With this discussion, the problem is almost over. I'll anyway discuss the full solution, but this is what major analysis is. Now what they want is statement showing the apportionment of joint cost. Joint cost is 1205. In what ratio? Sales net of selling expenses. Sales net of selling expenses. They have given some different method now. Sales net of selling expenses. Joint cost will have to be distributed to P1 and P2. P1 28.38 lakh is the selling expense. P2 25 lakh is the selling expense. 28.38 and 25. 28.38. So listen, the ratio of distribution is this multiplied with 110. Multiplied with 110 and subtract selling expense. Subtract the selling expense. They are saying sale value net of. Net of means I'll have to subtract. Net of means I'll have to subtract. Can you do in the calculator? 4.86. We'll do it in lakhs. 4.86 into 110 minus 28.38. 4.86 into 1. How much? 0.22. Other side is 3.24 into 325 minus 25 lakh. 10. In this ratio, I have to distribute the cost. This is the ratio to distribute the cost. The ratio of distribution is 506.22 is to 1028 between P1 and P2. The question is saying distribute in the ratio of sales net of selling expenses. Sales net of selling expenses. So you see the calculation here. 1205. Ratio of distribution is 506.28 is to 1028. 506.22 is to 1028. And my distribution is 397 and 807. 397 and 807. You got this number only, no? 506. Yeah, 506.22 on 1028. The ratio they have given in this question is what? Sales net of selling expenses. Sales net of selling expenses. Whenever losses are there, please draw the diagram properly. Input leads to losses, output. Again, divide, again input, output, loss. Loss will keep coming. Once you decide this properly, then it's very simple. Then they are saying statement of profitability at split off. At split off, the name is P1, P2. After further processing, the name is YP1. The name is YP1. At split off, it is P1, P2. After further processing, the name is YP1. I'll quickly discuss. If you sell at split off, sales is 4.86 into 110. 4.86 into 110. 3.24 into 325. And if you sell after further processing, 4.617 into 150. 4.617 into 150. Share of joint cost we just now calculated. We subtract that. Selling expenses subtract. And for YP1 you have to subtract 128 further processing cost. For YP1 you have to subtract the further processing cost. And this is how the statement will look. P1 is making a profit of 108. P2 is making a profit of 220. YP1 is better than P1. YP1 is better than P1. So I will do further processing of P1 and make it as YP1. I'll do further processing of P1 and make it was YP1. 2-3 important points. See the further processing cost. Not applicable. Not applicable. Joint cost for P1 is same. YP1 is also same because P1 and YP1 is not a different product. It is the same product. It is the same product. That shortcut approach will not work. What a shortcut is? Sale value after further processing less sale value at split off. That approach will not work. I cannot use that approach to do the calculation. Reason is very, very simple. In case there is a selling expense, you have to write it separately only. You'll have to write it separately. If you try that shortcut, you will not get the answer. You will end up getting a wrong answer because in the shortcut format, selling expenses do not come. Selling expenses do not come. Any doubts on this? Any doubts? So whenever there is a loss in further processing, please draw the proper diagram. If you draw the diagram, you will be able to get to the answer. Now coming to byproduct costing, let's look at this. Company manufactures one main product M1, two byproducts B1 and B2. For the month of January 2013, following details are available. Total cost up to separation point, technically called as joint cost. Technically called as joint cost is 2,12,400. Cost after separation. Cost after separation is further processing cost. B1 and B2 has a further processing cost. B1 and B2 has a further processing cost. Number of units produced, selling price, estimated net profit, estimated selling expenses, no beginning, allocation of joint cost and an income statement. What we do is our preferred treatment is calculate NRV of byproduct. Calculate NRV of byproduct. That NRV subtract from 212,400. Balance whatever is there. Give it to only M1 because there is only one main product. Only one main product. If there was a M1, M2, M3, then distribute the balance cost to M1, M2, M3. Which method? Any of the 6 method. Physical units, survey method, your contribution margin. So first let's calculate NRV. Working note 1, computation of NRV, right? Working note 1, computation of NRV, B1 and B2. Then I'll give you a short approach. Computation of NRV. Particulars B1 and B2. Sales less further processing cost less selling expenses less estimated profit, NRV. Sales less further processing cost less selling expenses less estimated profit, and NRV. Sales for B1 and B2 is 1800 units into 40 rupees. 1800 into 40. I'll analyze M1 later, okay? 1800 into 40. B2 3000 into 30. 3000 into 30. Further processing cost is 35,000, 24,000. 35 and 24. Further processing cost is 35,000 and 24,000. Selling expenses given in the question is 15%. Profit margin is 20 and 30. Selling expenses 15%. 15%. 15%. Profit margin is 20 and 30. 20%. 30%. Gap is called NRV. Gap is called NRV. Gap is the NRV. One of the most commonly used method. One of the most commonly used method is NRV. Now, joint cost allocated to M1. What goes to M1 is 212,400 given in the question minus 11,800 minus 25,500. Minus 11,800 minus 25,500. 212,400 minus 11,800 minus 25,500. What's the amount you get? Now listen. See, when I subtract it, indirectly what it means is 175, 100 will go to M1. 175, 100 will go to M1. Balance has to go to some product, no? Because 212, 400 is the cost. 175, 100 will go to M1. Technically, 11,800 is the joint cost of B1 and 25,500 is the joint cost of B2. That's what technical meaning is. When you say I subtract, 11,800 goes to B1 and 25,500 goes to B2, 25,500. Now, in exam situation, or if this question comes, I will not be doing this way calculation. How will I do? Now, write particulars M1, B1, B2 total. M1, B1, B2 and total. Instead of doing it like this is a logical explanation. I can do it like this: sales less further processing cost less selling expenses less share of joint cost profit. This is how I will do it from an exam point of view. Quick answer: sales less further processing cost less selling expense less share of joint cost and profit. First product sales is 4,000 into 100. 4,000 into 100. B1, B2, you already know the sales. Four lakh 72 and 90. The first table is not even needed to solve the question. I wanted to tell you that I'll call it as NRV and subtract it. Further costing cost is 0, 35, 24. 35 and 24. 0, 35 and 24. Selling expenses is 20, 15 and 15. 20%, 15% and 15%. 20, 15 and 15. $20, 15 and 15. Share of joint cost, I will write it later. Profit is given in the question. B1 profit is 20%, B2 profit is 30%. M1 profit they will not give. They have given profit for two products, 20 and 30. So write profit directly, 20%, 30%, 20% and 30%. Balancing figure is share of joint cost, technically NRV. Balancing figure, if you tell me the balancing figure here, what should be the balancing figure here in B1? So that I get a profit of 14,400. 11, 800, 25, 500. This is what will come as balancing figure. Balancing figure 11,800, 25,500 will be the balancing figure. Will be the balancing figure. As I said, there is no need to do the earlier calculation. Directly we will do this only and call it a share of joint cost. NRV is the joint cost allocated to the byproduct. NRV is the joint cost allocated to the byproduct. Overall cost was 212, 400. Balancing figure is 175, 100, and I get profit accordingly. This is part 2 of the question. Income statement as well as distribution of cost. Income statement as well as distribution of joint cost. Income statement also comes in this. Joint cost distribution is also done. This is with byproduct, okay? Accounting with the by. If we had two main products and all, then the balance you'll have to distribute between A and B, C and D, whatever products are there. Any doubts in this? If you see the answer, I've directly done only a P and L. In the P and L, the share of joint cost is balancing figure. The share of joint cost is balancing figure. Okay, let's look at one more question. Three products X, Y, and Z along with byproduct B are obtained in a crude state which require further processing at 5 for X, 4 for Y, 2.5 for Z. 5 for X, 4 for Y, and 2.5 for Z before sale. Byproduct is, however, saleable as such to a nearby factory. Selling prices of the three products and byproduct assuming the yield and net margin of 25% on cost will become 20% on sales. 25% on cost will become 20% on sales when you do the calculation. This was the price fixed. I am not very sure whether I'll ultimately make this profit or not make this profit. This was the profit margin fixed by the company. This was the profit margin. They had an estimated margin in mind saying that I want a margin of how much? 25% of cost. During a period, joint cost is 90,800, 8,000, 6,000, 4,000. Byproduct should be credited to the joint cost and only the net joint cost are to be allocated to the main product. Only the net joint cost are to be allocated to the main product. What is byproduct should be credited? Reduce it in the debit side of P&L. Reduce it in the debit side of P&L. First, I'll calculate NRV of the byproduct. Keep listening. There's nothing for you to note down. How many units of byproduct manufactured in this example? How many units of byproduct? Participate, guys. How many units of byproduct manufactured? 1,000 units. They will be sold for 1 rupee. They'll be sold for 1 rupee. So NRV is equal to 1,000 minus 20% profit. Minus 20% profit. So 1,000 minus 200, 800. So from 9,800 remove 800. From 9,800 remove 800. Leftover number is 90,000. As I said, our preferred accounting treatment is compute NRV of the byproduct and deduct the same from the joint cost. Balance joint cost can be distributed among various product. Which are the product? X, Y, and Z. X, Y, and Z. What method will I follow? I will follow NRV method. Reason is there is an estimated profit margin given in the question. There is a estimated profit margin given in the question. Will that become the final margin? I don't know. Because if that was becoming the final margin, they will not ask this. They are asking what is the actual margin. They are asking what is the actual margin. If the final margin will be 25%, why will they ask that? What is the margin? So in this question, estimated margin is given. Estimated margin is given. As I had said, in case estimated margin is given in question, what is estimated margin? 25% on cost or 20% on sales. Calculate what? NRV and distribute in the ratio of NRV. Distribute in the ratio of NRV. Listen, I'll calculate NRV for one product. Product X. Product X. We have produced 8,000 units. We have produced 8,000 units into 13.75. 8,000 into 13.75 sales. Tell me the value. 1 lakh less profit. Estimated profit is 1/4 on cost. 25% on cost. It will become 20% on sales. When you do the calculation, it will become 20% on sales minus 3 items to be subtracted for NRV. One is estimated profit, selling expense not there, further processing cost, which is 5 per unit, which is 5 per unit. So I have to subtract, and this gap is called NRV of X. Like that, you'll get NRV of Y, and like that, you'll get NRV of Z. You will distribute the joint cost and then prepare a proper income statement. What will the income statement have? Sales less further processing cost, less joint cost, profit, and profit margin as a percentage of cost. Requirement is profit margin as a percentage of cost. So see here, this is the NRV calculation, and on the basis of NRV distributed the joint cost, prepared an income statement. In reality, I made margin of only 17, 18, and 16. I made margin of only 17, 18, and 16. I'm not getting into all this calculation. This is very simple for you to understand. Main approach for byproduct is very simple. What will you do for byproduct accounting is you will calculate the NRV of the byproduct. You will calculate the NRV of the byproduct deducted from the joint cost, balance one product there, give it fully. 2-3 products are there, any method can be followed. This question, estimated margin is given. This question, estimated margin is given. If estimated margin is given in the question, we will follow NRV method of distribution. We'll follow NRV method of distribution. Clear? Any doubts on this? Question 8, you will be doing it at home, which is process costing and joint and byproduct costing. When you attempt at home, you'll be able to get to the answer. Only thing I want to explain is cost per good unit. Cost per good unit. Our formula for cost per good unit was all expenses minus sale value of normal loss. In the expected output, what used to happen is processed production minus normal loss. We were subtracting normal loss. If joint and byproduct costing and process costing joins together, then in the numerator you have to subtract NRV of byproduct. You have to subtract NRV of byproduct, and in the denominator you have to subtract byproduct units. In the denominator you have to subtract byproduct units. In the numerator you have to subtract NRV. NRV, like what I've been doing till now. I've been telling that NRV has to be calculated and removed from the joint cost, removed from the joint cost. So there is a question like this where they have ended up testing process costing, and in the last, when you go to process 3, so this will become a practice question for you to do. Process 1 and process 2 is normal process costing. Process 3, when you come, it will have normal output as well as byproduct, and when you do the calculation, everywhere it is like this: debit side of process account minus normal loss, lost product minus NRV of byproduct minus byproduct units, NRV of byproduct and minus byproduct units. I don't want to do a process costing question now, but that's the concept. Concept is very simple. You will have to subtract NRV. What is NRV? Sale value less further processing cost less selling and distribution cost less estimated profit if given in question. Less estimated profit if given in question. If not given, ignore it. I don't have a problem. But if it's given, then please subtract it. Clear? Any doubts on this? Okay. With this, our discussion on joint and byproduct costing gets over. I'm left with two chapters. One is standard costing. One is operating costing. Operating costing, I will try to record it maybe in the next few days. If I record, it will be uploaded in my YouTube channel. Else, in my YouTube channel, the old videos are available on operating costing. So you can see that. Now, coming to standard costing, as I had said earlier, that I wanted you to watch a video. There was a playlist which was given, 15 minutes video were there on three topics. One was on material variances, one was on labor variance, one was on overhead variance, and one you could have seen for sales, but I told not to see because it's not applicable for you. Unless you have seen those videos, you may struggle little bit in the session. Okay, I'll first tell what is standard costing, where did this come into picture, and then do few questions around it. Now, standard costing or basically variance analysis, the other name is, basically comes into picture when an organization follows chapter 15. What is chapter 15? Budgets and budgetary control. If you are following chapter 15, then only standard costing comes into picture. So if an organization has a budget at the end of the month, or at the end of the year, at the end of the quarter, at the end of a week, I want to ascertain how did I perform as compared to the plan which I set in, That is technically called a standard costing or variance analysis. Now, in that, just give me a minute. Now, this entire chapter, or be it most of the other chapters, but this I'm very sure will get fully revised in case you do only the MCQs itself. In case you complete all the MCQ itself, you will get full clarity on it. Along with those 2-3, even if practice questions not done also, I'm okay. But this chapter, the full clarity is there on MCQ, you're kind of done. So standard refers to the planned performance, actual refers to the actual performance. Standard costing analyzes the variation in performance as compared to the budget and fixes responsibility for taking what? Corrective action. Now, first let's understand the difference between standard and budget, because these two are interchangeably used. The term standard and budget is almost similar. One small difference. I told my company person produce 10,000 units and incur 20 lakh rupees. 10,000 units and incur 20 lakh rupees. He has produced 8,000 units. He has produced 8,000 units, incurred 17 lakh. He comes and tells me, I saved 3 lakh rupees for the company. I told him 10,000 units, 20 lakh rupees. He says, I have produced 8,000 units. Cost is only 17 lakh. So I have saved 3 lakh rupees for the company. Please pay me bonus. What is the problem in this argument? Units are changing. So 20 lakh is called budgeted cost. 20 lakh is called budgeted cost. 17 lakh is called actual cost. For 8,000 units, what cost I should have incurred? For 8,000 units, how much I should have incurred? That is called standard cost. Standard is always any standard time in the labor chapter was calculated with the help of actual output, when we did EOQ, raw material consumption, standard raw material consumption was calculated with the help of actual production, AO into input by output. When we did our labor chapter, ST equal to AO. Any standard is always computed with the help of what? With the help of actual performance. Now, if I analyze at a per unit level, 20 lakh divided by 10,000 is 200, or 16 lakh divided by 8,000 is also 200. At a per unit level, there is no difference. At a per unit level, standard cost and budgeted cost is same, because many places we interchangeably use, because at a per unit level they are same. At a per unit level, standard cost and budgeted cost is same. So budgeted cost refers to the cost to be incurred for budgeted output. Standard cost refers the cost to be incurred for actual output. For actual output, variance is the difference between standard and actual. Variance is the difference between standard and actual. Only one place, some formula we will do, budget minus actual. That is for fixed overhead, because fixed overhead does, see, if in this example I say 20 lakh is a fixed cost, 20 lakh is a full 20 lakh is fixed cost, then I am right, I save 3 lakh rupees for the company. Then I am right, I save 3 lakh rupees for the company, because fixed cost does not change with volume. Fixed cost does not change with volume. So I should be rewarded for it. I save 3 lakh rupees for the company if it is a fixed cost. If it is a fixed cost. Variable cost, obviously it should have gone down with the reduction in output. Clear? Now, first we are having material variances, where I clearly told I wanted you to go through this. In case you have not gone through it, you may struggle little bit, but still I will explain some of the formulae and then I start doing questions. So when I do material variances, material cost arises due to two reasons: quantity, price. Quantity refers to quantity of raw material, and price refers to the price at which you are planning to buy the raw material. Price at which you are planning to buy the raw material. So first situation is I can have single raw material. I can have single raw material, or I can have multiple raw material. I can have single raw material or multiple raw material. Single raw material, this side I have price. I have a standard price. I have an actual price. Standard price refers to the price to be paid. Price to be paid for buying 1 unit of raw material. AP refers to the price actually paid. Actually paid for buying 1 unit of raw material. SQ, standard quantity. AQ, there is AO. AO is output. AQ is raw material. AQ is raw material. Standard quantity refers to the quantity to be consumed. Quantity to be consumed. Standard means to be, and actual means what has happened. AQ refers to the quantity actually consumed. SQ refers to the quantity to be consumed. SP refers to the price to be paid. AP refers to the price actually paid. Standard time refers to the time to be taken. Actual time refers to the time actually taken. So, to be taken, what should have happened is standard. Now, in order to solve problem, we need a computation table, which you could have learnt in different ways from different people if you have gone for classes. I do a chart. From the chart, I start with SP, connect with the first item called SQ. Again, start with SP, connect with the second item called AQ, and start with AP and connect only with the last item. Connect only with the last item. I don't connect AP with SQ because I don't need it in the table. I don't need this in the table. This is what you would have seen in the video. SP into SQ, SP into AQ, AP into AQ. This is what will come in our table. SP into SQ, SP into AQ, AP into AQ. This top part is called as price variance, and this is called as quantity is called usage, price and usage variance, price and usage variance. Now the top part, price variance, is nothing but, listen, the difference between SP and AP, and usage is nothing but the difference between SQ and AQ. Any variance formula is always standard minus actual. Formula is always standard minus actual. Can it be actual minus standard? Do it, no problem. The formula is arranged in such a manner that if you do standard minus actual, you get a negative answer, it is an adverse variance, and you get a positive answer, it is a favorable. Some question SP can be more than AP, SP can be less than AP. This is just a chart to remember the formula. Now my price variance is nothing but this part, this top part, the green shaded part is my price variance, which from a formula point of view, it is a rectangle. AP connecting with AQ is one rectangle, and from there you remove the smaller rectangle, SP connecting with AQ. From there you remove the smaller rectangle, you will be left with that green portion. You will be left with the green portion. How you arrive at the formula is, from the bigger rectangle, I remove the smaller rectangle, but formula is smaller minus bigger. Formula is smaller minus bigger. Just see, this chart and all is just a tool to remember the formula. So the green shaded portion is SP into AQ minus AP into AQ. Similarly, this part, the usage is SP into SQ, the smaller rectangle minus the bigger rectangle, SP into AQ, SP into AQ. In case you have gone through the video earlier, I think you should be able to follow it. If you have not gone through the video, you may struggle it. Still, after today's session, you are not very clear on standard costing, then there's only one choice. There is a 15-hour video. 15-hour video. If you have time, you can watch that. The playlist is available in my channel, where at least see the first video fully, 3-hour video. Full standard costing clarity will come. Balance are just copy pasting of that. So this is the first situation. Single raw material, SP into SQ, SP into AQ minus AP into AQ. The top part is called price variance. The bottom part is called usage variance. The bottom part is called usage variance. Usage is SP into SQ minus SP into AQ. Price is SP into AQ minus AP into AQ. Later on, SP AP continues. SQ AQ continues. But I can have one more raw material. If you have multiple raw material, in between this, an item comes called as RSQ. In between, an item comes called as RSQ. The table is SP into SQ, SP into RSQ, SP into AQ, AP into AQ, SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. The top part continues to be rate variance. What is the formula for rate variance? Top part, what is the formula? Part is SP into AQ minus AP into AQ. Bottom together is usage. Bottom together is usage. So smallest rectangle, SP into SQ minus SP into AQ, SP into SQ minus SP into AQ. This usage is further broken down into yield and mix. Yield and mix. Can you tell me what is the formula for material mix variance? SP into RSQ minus SP into AQ, SP into RSQ minus SP into AQ, and yield variance is SP into SQ minus SP into RSQ. The chart will give you the formula. Major worry of the student is remembering the formula, which I don't want you to do. So the first segment I did is this material variance. I need standard quantity. This is the budgeted quantity which I have to use for producing the actual output. Revised standard quantity. Revised standard quantity. If you have more than one raw material, you put the total of the actual quantity. You put the total of the actual quantity of raw material. Total of the actual quantity of raw material, and split in some original plan. Split that in some original plan. AQ refers to quantity to be used. Standard price to be paid. Actual price actually paid. If you have single raw material, SP into SQ, SP into AQ, AP into AQ, and these are the three formulae. In case chart is not clear, nothing is clear, you'll have to remember the table, you'll have to remember the formula, which I never remember. That's up to you. Then multiple material, SP into SQ, SP into RSQ, SP into AQ, AP into AQ. I'll again repeat, the chart technique would have easily helped multiple students If you watch the video itself, you will get clarity there. Lot of students have got benefited with the chart technique, because standard costing becomes difficult because you try to remember the formula. You try to remember the formula. Moment you try to remember the formula, you make it wrong because so many formulae are there, so much confusion happens. And these are the variances. I'm not going to even talk on any of the formula because all formula comes from there. All formula comes from there. Then I have labor, single labor, multiple labor. There's something called as with idle time and without idle time, with idle time and without idle time. So labor we have SR AR. This side we have SH AH, SH and AH. The table is SR into SH, SR into AH, AR into AH. This part is called rate. This is called efficiency. Can you tell me the formula for labor rate variance? SR into AH minus AR into AH. It's always standard minus actual. Efficiency variance formula. SR into SH minus SR into AH. Labor cost is the overall variance, which is the smallest rectangle. SR into SH minus the biggest AR into AH. This is single labor without idle time. Single labor without idle time. SR into SH, SR into AH, AR into AH. The top part is called rate variance. The bottom part is called efficiency variance. Single labor without idle time. Single labor without idle time. Then comes single labor with idle time. With idle time. With idle time means actual hours is broken down. Is broken down as actual hours worked and actual hours paid. Actual hours worked and actual hours paid. Worked is basically the number of hours where people have actually worked, and paid is I paid for more because there is idle time. There is idle time. In that situation, SR AR SH AHW AHP, actual hours worked, actual hours paid. SR into SH, SR into AHW, SR into AHP, AR into AHP. The top part is called rate, efficiency, idle time. Idle time is the gap between hours worked and hours paid. Idle time is the gap between actual hours worked and actual hours paid. Again, I'm repeating, you will understand all this better if you had gone through that video, because I cannot spend time on explaining that fully now. And in case you need more explanation, that was a 15-minute video, more explanation, then you have to watch the detailed playlist. But if formula is clear, then only I can solve question. When I solve question, I'll again be putting the chart and doing it. But formula clarity not there, very difficult for you to move in this chapter, because students struggle mostly with remembering the formula. Then this is second situation. Third situation is multiple labor without idle time. In that case, SR AR SH AH, in between RSH comes. There in between RSQ was coming. Here in between RSH come. SR into SH, SR into RSH, SR into AH, AR into H. This is rate. Put together is efficiency. This is yield. This is mix. Yield has another name called sub efficiency. Mix has another name called gang variance. If anybody asks me a formula, what is formula for yield variance? Comparing these two, SR into SH minus SR into RSH. Mix variance, comparing the next two, RSH minus AH. Efficiency, both together, SR into SH minus SR into AH. Rate variance, SR into AH minus AR into AH. Any formula can come from the chart. Provided you have clarity on the chart. Clear? Any doubts on this? And last was multiple labor with idle time, where I write SR, I write AR, SH, AH, in between RSH will come because it's multiple, and idle time will mean AHW, AHP, actual hours worked, actual hours paid, and actual hours paid. table SR into SH, SR into RSH, SR into AHW, SR into AHP, and AR into AHP. Top part is called rate. Top part is called rate variance. The bottom part, the last one is called idle time. This together is efficiency. This is yield. This is mix. Yield and mix. Now, unless the clarity is there in the formula, again and again you'll only keep struggling. You will keep struggling. Clear any doubts first? Any doubts? For the broad concept is very simple. What we do in standard costing is we try to compare the standard performance with the actual performance. The purpose of comparison is to find out, is there any variation in performance? Is there any variation in performance? And in case there is a variation in performance, I want to fix responsibility. So if you look at the material, this MCQs and all, you leave it. I have labor variances, 4 situation: single labor without idle time, single labor with idle time, multiple labor without idle time, multiple labor with idle time. Technically, if you remember the table and the formula, problem is over. But why to remember so many things? That is where the chart comes. The chart will give you the table and the formula automatically. Similarly, I have for variable overhead only one situation. We do not have multiple situation. Or variable overhead only one situation. The variable overhead situation is very simple. SR, AR, SH, AH, SR into SH, SR into AH, AR into AH. The top part is called expenditure, bottom part is called efficiency. The top part is called expenditure, the bottom part is called efficiency variance. No multiple situation. SR into SH, SR into AH, AR into AH. Some conversion factors are there. When I do a problem, I'll explain at that time those conversion factors. But SR into SH, SR into AH, and AR into AH. Very simple kind of a situation as far as variable overhead variance is concerned. Then comes your fixed overhead variances. Here we have 2 situations. One where data on days is available, that is called with calendar, and second is without calendar. With calendar variance and without calendar variance. One issue with fixed overheads is they do not change. They do not change with changes in output. They do not change with changes in output, and this leads to certain complication. Now, first is without calendar. Without calendar means without an item called PFOH, possible fixed overhead. Without calendar is without PFOH. What is with calendar and without calendars? If question gives you actual days and budgeted days, both data, actual days and budgeted days, you will calculate calendar variance. If that data is not there, you will not calculate calendar variance. Here, I have only SR. I don't write AR. So SR into SR into SH. I have AH and BH. Budgeted hours. Till now, budget was never worry. We are bringing budgeted hours for the first time. The reason for bringing budgeted hours is because fixed overheads do not change with volume. So table is SR into SH, SR into AH, SR into BH, and the outer column is called AFOH. The outer column is called AFOH, actual fixed overhead. I don't write it as AR into AH because I don't want that. I want to write it as AFOH. The outer part is called expenditure variance. So the outer part SR into BH minus AFOH, SR into BH minus AFOH. First part is called efficiency, SR into SH minus SR into AH, and second part is called capacity, SR into AH minus SR into BH, and together it is called volume. The first part is called efficiency, the second part is called capacity. Together it is called volume variance. In the same, if data on calendar is available, SR, SH, AH, there's an item called PH. PH means possible hours. I'll explain when I do a question. PHs possible hours, DHs budgeted hours, and the outer column is called AFOH. The outer column is called AFOH. This part is expenditure, efficiency, capacity, calendar, put together is volume. Efficiency, capacity, calendar, put together is volume variance. Volume variance is SR into SH minus SR into BH. Efficiency SR into SH minus SR into AH. Capacity SR into AH minus SR into PH. The capacity variance formula is different in two scenarios. There it is AH minus BH. Here it is AH minus PH, possible hours. And possible hours minus budgeted hours is called calendar variance. It's called calendar variance. Then we'll be doing something called as budgeted ratios. I'll explain that when I do a question. Okay, I'm kind of done with discussing the concept. What I'm going to do is I'm going to give a 15 minutes break. In case you have not watched that video earlier, you may take time to watch the video so that it becomes easier for you to follow what I'm going to do. I'm giving a 15 minutes break, mostly for going through the video in case you have not gone through, or going through whatever notes it is there. It is not a normal break where you can go out, you spend time, understand things, and then I start doing questions. 15 minutes. Okay, now I'll start solving questions. What I'm going to do is every question will ask for some or the other variance. Variance calculation I'll not be doing. I'll only be doing the table. After a table is done, variance is just a formula. That formula will come from understanding of the chart. So our focus would be, I'll draw the chart. You need not draw the chart. From the chart, I'll put the table. Table you will do along with me. Table you will do it along with me. Unless it's a reverse working question, direct question and all easy to do. Reverse working will need the formula understanding. So once the table is done, application of formula saying that material cost is this minus this, material price is this minus this, that calculation we are not going to do it in the session. That calculation you will have to do either if you remember the formula you do it, or you have to understand the chart and from there pick the formula and then do it. So I come to now page 123, material variances. XA Limited produces an article by blending two basic raw material. Following standards have been set for the raw material. Material A, material B. The standard loss in processing is 15%. During September, I have produced 1700 kg of the finished product. The position of stock and purchases is as follows. Calculate all relevant variances. Assume FIFO. Also compute material purchase price variance. What is this material purchase price variance? That also I'll explain when I do the calculation. So first, any material question, you have to decide whether it is a single raw material or multiple raw material. Is it a single raw material or multiple raw material here? Participate. I want participate. Multiple raw material. There's a raw material A and there's a raw material B. So if it is a multiple raw material, you are not going to draw this diagram, but multiple raw material is like this: SP, AP, SQ, AQ, and in between you have RSQ. Some authors call it as RAQ also, doesn't really matter. So my table will have SP into SQ, SP into RSQ, SP into AQ, AP into AQ. The top part is called price area, price. This is called usage. This is called yield, and this is called mix. Let's not worry now about the formula. Our job is to fill the table. If we get the table properly, variance calculation is just a formality. Now below the table, below the chart, basically in your notebook, question 1. You are not going to do a chart. Question 1. First column is called material. SP into SQ, SP into RSQ, SP into AQ, AP into AQ. These are the 4 columns I have to get. SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. If I get these columns, write the table. SP into SQ, SP into RSQ, SP into AQ, AP into AQ. If we are able to get this chart, that is this table properly, calculation is just a formality where some of you may struggle now because you don't remember the chart, you don't remember the formula. So I'm not going to even do that. That part of it, you be clear on the formula and then you keep applying it. So once the table is done, you will leave half a page space or one page space where you will do the variance calculation. After the class is over, you can do variance calculation applying formula. Two material we have A, B and total. A, B and total. Material A, material B and total. SP refers to the price to be paid for purchasing 1 unit of raw material. What is the standard price given in the question? Read here. Standard price in the question. 4 rupees and 3 rupees. 4 rupees and 3 rupees. 4 rupees for material A, 3 rupees for material B. Write it at three places. 4 into and 3 into. Three places. SP, SP, SP. 4 into 3 into. AP refers to the price actually paid. Listen, AP is 3,400 divided by 800, but there is a check. There is a check. Reason is there is some opening stock. There is some opening stock. So I'll come to AQ in a minute. I'll come to AP in a minute. Now, first we fill price like this, then we fill quantity in the reverse order. That is AQ, RSQ, and SQ. AQ, right? Note 1, AQ equal to opening stock plus purchase minus closing stock. AQ means quantity consumed. Opening stock plus purchase minus closing stock. AQ is quantity consumed. A equal to 35 plus 800 minus 5. 35 plus 800 minus 5. 830. B equal to 40 plus 1200 minus 50. 40 plus 1200 minus 50. 1190. Now, when I do my AP into AQ, whatever I consume, FIFO method says opening stock is consumed first and the balance comes from the current year purchase. FIFO method says opening stock is consumed first. So in this 830, 35 units I consume first. 35 is the opening stock. If nothing is given, opening stock would be at 4 rupees. Standard price. Opening stock would be at 4 rupees. Opening stock would be at 4 rupees. If nothing is given in the question and there is data, many questions stock data will not be there. If stock data is not there, directly purchases is equal to consumption. Directly purchases is equal to consumption. In this question, we have this breakup. So 35 into 4. What is AP into AQ is 35 into 4 plus 795. What is 795? Is 830 minus 35. 830 minus 35. And this is at 4.25. What is 4.25? Is 3,400 divided by 800. 3,400 divided by 800. In case no opening stock, closing stock, AP into AQ is 800 into 4.25. 800 into 4.25. 800 into 4.25. I'm repeating again. AQ means quantity consumed. AQ means quantity consumed. Opening stock plus purchase minus closing stock. 830 units. FIFO method. FIFO method. First 35 is consumed first. Balance from LIFO method means current year purchases consumed first and then from the opening stock. So AP into AQ, right? 35 into 4 plus 795 into 4.25. 35 into 4, 795 into 4.25. 35 into 4 and 795 into 4.25. Clear? Similarly, this is 1190. In this, 40 is into 3 rupees. 40 units is into 3 rupees. 40 units, that is the opening stock. Opening stock is into 3 rupees. Balance is 11, that is at 2.5. That is at 2.5. 40 into 3 and 1150 into 2.5. 1150 into 2.5. Any doubts? So 40 into 3, 1150 into 2.5. AQ is 830, 1190. 830 and 1190. 830 and 1190. What is RSQ? Whatever note number, RSQ calculation. For RSQ, total of AQ 830 plus 1190. Total of AQ 830 plus 1190. How much? And this is broken down as A, B. Broken down as A and B. There is a ratio given in the question. Some ratio is given. Standard ratio between A and B. A is what percentage? 40%. B is 60%. So 808, 1212. 808 and 1212. 40-60 ratio. 808 and 1212. Clear? Then SP into SQ. SP into SQ, which is the only missing data. SP into SQ is the only missing part. SQ is always computed with the help of actual output. SQ is always computed with the help of actual output. So SQ is equal to, right? SQ is equal to AO into input by output, into input by output, actual output into input by output ratio, actual output into input by output ratio. Actual output is 1700. The company produced, there is AO and there is AQ. AQ is quantity of raw material. AO is output produced. AO is output produced. 1700 into input output is, there is a loss of how much? 15%. So I assume input is 100, output is 85. You can say input is 1, output is 0.85. Doesn't matter. Any ratio you take. 100 by 85. Break it into A, B. 40%, 60%. 40% and 60%. Clear? The table would have looked like this. You have to multiply, put a total. You have to multiply and put a total. After this is done, this part you will be doing at home. If you remember the formula, this is how it is. Material cost variance broken down into price and usage. Usage is further broken down into yield and mix. Usage is further broken down into yield and mix. I don't want to write the formula, write the variance, because it will unnecessarily complicate things for some of you. For some it could be easy if you remember the logic. For some it could become difficult if you don't remember the logic. So very simple. You will be leaving around this much space for you to do the variance. This chart is just easy for you to understand. You need not present as a chart. In exam, material cost variance is equal to SP into SQ minus AP into AQ. Material price variance is equal to SP into AQ minus AP into AQ. Material usage variance is SP into SQ minus SP into AQ. Material yield variance is equal to SP into SQ minus SP into RSQ. Mix variance is equal to SP into RSQ minus SP into AQ. You need not remember the formula. Whatever I told, I was visualizing the chart in my mind. I visualize, because nobody can remember so many formulae. You will unnecessarily complicate things. In this question, there is one more variance called material purchase price. Material price variance is SP into AQ minus AP into AQ. AQ means quantity consumed. AQ means quantity consumed, which is opening stock plus purchase minus closing stock. MPPV, material purchase price variance, is SP into AQP minus AP into AQP. It's there in my concept book. Actual quantity purchased. Only the quantity purchased is to be taken. That is not 795 and 1150, whatever you did. 800 and 1200 as it is, and price is 4.25 and 2.5. Only current year purchase. Only the current year purchase is to be taken into consideration. No opening stock, no closing stock, no FIFO method, no LIFO, nothing is done. Directly just do SP into AQP, AP into AQP, SP into AQP, AP into AQP, and then we are done. SP into AQP, AP into AQP, and then we are done. Any doubts on this? Any doubts on this? Calculation, whatever space you want to leave, you leave it so that you do variances at home. Completing the table is after the values are written in the calculator, you'll have to multiply and put a total. Clear? Any doubts on the first? In material variance, I've done one category, which is multiple material. Let's come to question 2. Following are the details of product Fomex for the month of April 2013. For the month of April 2013, standard quantity of material required per unit 5 kg. Input output ratio is 5 is to 1. Input output ratio is 5 is to 1. Actual output 1000. Actual cost of material used. Actual cost of material used is AP into AQ. Actual cost of material used is AP into AQ, and there is a price variance given in the question. There is a price variance which is given in the question. So somewhere I may have to write the formula of price variance to complete the table. Otherwise, I don't want to get into the requirement is quantity used, everything, whatever they ask. I just want the table. I just want the table. This question is a single raw material. It's a single. What is multiple raw materials? Giving names A, B, C, or X, Y, Z. Here, I may be using 5 kg of raw material, but that does not mean it is a multiple raw material. This is a single raw material situation. For single raw material, write the table. SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. Objective is to complete this table. SP into SQ, SP into AQ, and AP into AQ. I have SQ information in the question. What is SQ is AO, AO into input by output. AO into input by output. So write SQ is equal to AO into input divided by output. AO into input divided by output. 1000 into 5 by 1, 5000. 1000 into 5 by 1, 5000. So objective is somehow complete the table. Somehow complete the table. So I have this data. SQ is 5000. AP into AQ is 7 lakh. AP into AQ is 7 lakh 14,000. AP into AQ is 7 lakh 14,000. We have to break it. I have to break it into AP and AQ. I'll see. And there is a variance given. Material price variance is 51,000 favorable. Material price variance is 51,000 favorable. And one data they've said actual price per kg is to be less than standard price per kg by rupees 10. Actual price is lesser than standard price. Actual price is lesser than standard price by rupees 10. By rupees 10. That's one information which they have given. Now, material price variance is equal to SP into AQ minus AP into AQ. SP into AQ minus AP into AQ. 51,000 favorable. F means positive, favorable, positive number. 51,000 is equal to SP into AQ minus 7,14,000. I will get what is SP into AQ. Then I'll again use it. I'll explain that later. First, tell me what is SP into AQ. 51,000 is equal to SP into AQ minus AP into AQ. You will get SP into AQ number. 7 lakh. I have to break it. As of now, let's write 7 lakh 65, but somehow I have to break it. Somehow I have to break this 765. Any doubts? Clear? Same thing we write again. Material price variance is equal to SP into AQ, AP into AQ. 51,000 is equal to AQ is commonly taken outside. AQ is commonly taken outside. 51,000 is equal to SP minus AP, and AQ is commonly taken outside. AQ is commonly taken outside. And the question says actual price is 10 rupees less than standard price. In other words, standard price is 10 rupees more than actual price. Standard price is 10 rupees more than actual price. Question says actual price is found to be less than standard price by how much? 10 rupees. So in short, 51,000 is equal to 10 AQ. Standard price is 10 rupees more than actual price. SP minus AP is 10 rupees. SP minus AP is 10 rupees. Any doubts on this? Standard price minus actual price is 10 rupees. What is the AQ you get? I substitute here. Tell me what is SP? 5100 I wrote here. 5100 I wrote here. What is SP? 1, same 5100 here. Same 5100 here. What is AP? 140. This 150 is copied here. That's all. Table is over. I'm not doing anything beyond this. I'm not doing anything beyond this. In this, I've got already some answer. Question wanted actual quantity 5100, actual price 140, usage variance formula application, cost variance formula application. Usage variances formula application. The see major worry of the student is on the formula, but major worry should be on the table. If you get the table correctly, everything else is formality. Everything else is formality. Getting the table right is very, very critical. Students, unfortunately, rather than focusing on the table, the main focus is on somehow understanding the formula, understanding the formula, understanding the formula. You end up missing out on the main computation. Any doubts on this? Clear? Once the table is done, again the same thing. Again the same thing. Now let's come to labor variances. Standard labor employment and the actual labor engaged in a 40-hour week. In a 40-hour week for a job are as under skilled, semi-skilled, unskilled. Moment I see something like this, it's multiple labor. It is multiple labor. Standard is the plan. Plan is to work 65, 20 and 15. 65, 20 and 15 and pay at 45, 30 and 15. In reality, 50, 30 and 20 work and we paid at the rate of 50, 35 and 10. Standard output is 2000 units. Actual output is 1800 units. Compute all variances. Compute all. This is multiple labor. This is multiple labor without idle time. Multiple labor without idle time. We are going to first do a computation table. Only the computation table. I'm not going to do anything beyond the computation table. So for multiple labor, exactly same thing. SR into SH, SR into RSH, SR into AR into AH. Exactly the same thing. Exactly the same thing. Let's open the table. Labor SR into SH, SR into RSH, SR into AR into AH. AR into AH. Skilled, semi-skilled, unskilled and total. Skilled, semi-skilled, unskilled and total. First, you have to decide which category the question is. There are 4 categories. Single labor without idle time, single labor with idle time, multiple labor without idle time, multiple labor with idle time. First, decide the category. First, decide the category. Once the category is decided, I put the information like this. What rate I wanted to pay? What rate I wanted to pay to these 3 people? It's given in the question. What rate? 45, 30 and 15. Please write 45, 30 and 15 at 3 places. 45, 30, 15 at 3 places. I wanted to pay 45. See, once you start writing, your table will keep getting filled, your confidence will improve. 45, 30 and 15. what we actually paid is 50, 35 and 10. What we actually paid is 50, 35 and 10. Actually paid is 50, 35 and 10. Actual hours is always actual hours into number of workers. Concept is man hours. Concept is man hours. Actual hours into number of workers, into number of workers. When we did labor also, I said concept is man hours. Man hours, number of hours into number of workers. Skilled. In reality we had 50 people. In reality we had 50 people working for 40 hours, working for 40 hours. So actual hours is 40 hours into 50 workers. 40 hours into 50 workers. Semi skilled, 40 hours into 30 workers. And unskilled, 40 hours into 20 workers. This will come at two places: 2000, 1200, 800, 2000, 1200, 800. Two places. Clear? RSH is total of actual hours in the originally planned mix. In the originally planned mix, RSH is RSQ was total of AQ, total of AQ in standard mix. So RSH, next to RSH calculation, total of AH equal to 2000, 1200, 800. 2000, 1200 and 800. How much? 4000 hours split in the ratio of 65, 20, 15. That's the plan. Plan was to do it in the ratio of 65, 20. Last question 40, 60. I had told you to split. Here the ratio is 65, 20 and 15. So split in the ratio of 65, 20, 15. 65, 20 and 15. 4000 and tell me the numbers. 2600, 800, 600. 2600, 800 and 600. Now comes the ASH calculation, one of the most trickiest in many question and most important one. SH calculation. Any doubts on the RSH part? Any doubts on the RSH part? Clear? Now coming to the SH, I will need a standard equation. The equation will tell how many hours is equal to how many units. My plan, people will work for 40 hours. How many people will work? 100 people. So my plan was 4000 hours. My plan was 4000 hours. 40 people, sorry, 100 people, 40 hours will give me 2000 units. 4000 hours and I'll get what? 2000 units. 4000 hours I'll get 2000 units. Right, standard equation. 4000 hours is equal to 2000 units. ST equal to AO. ST equal to AO. Standard time equal to actual output. 4000 hours is equal to 2000 units. ST equal to AO. Question mark equal to 1800 units. Get me the question mark. 3000. This 3600 will be split in the ratio of 65, 20 and 15. Original plan. Original plan. Again, I am repeating 4000 hours is equal to the equation is the most important one. The equation is the most. 4000 hours is equal to 2000 units. ST equal to AO. Question mark equal to 1800. 3600 hours is equal to 1800 units. 3600 hours is equal to 1800 units, and you break it as skilled semi-skilled, unskilled, skilled, semi-skilled, and unskilled in the ratio of 65, 20, 15. This is what it will be. Beyond this, my job is not there. You will leave space and you will do the variance calculation for your satisfaction. If this table is done properly, problem gets over at that stage. Problem gets over the moment the table is done properly. You have to identify which category the question fits in and complete the table. Any doubts? Clear? Can we proceed? Any doubts on this? So this is the variance calculation part. You can keep doing any amount of calculation, doesn't really matter. You'll have to keep writing this. Let's come to 4. Following information is given regarding standard composition and standard rates. Standard composition and standard rates of a gang of worker. The plan is 10 is to 5 is to 5. The plan is 10 is to 5 is to 5 and rates are 62.5, 40 and 35. According to a given specification, a week consists of 40 hours and output for the week is 1000 units. This will give me the standard equation. This will give me the standard equation. In a particular week, the gang consisted of 13 men, 4 women and 3 boys. The gang consisted of 13, 4 and 3 and actual wages were men were at 60, women were at 42.5, boys were at 32.5. And last line said 2 hours were lost due to abnormal idle time. See, if you lose time due to normal idle time, that is not idle time. That is not idle time. There was one question in exam where they said we expect 5% idle time, actual idle time 5%. ICI solved it as multiple labor without idle time. Multiple labor without. Normal idle time is not idle time. Normal idle time is fit into my calculation. What is idle time is abnormal. What is idle time is always abnormal. One question they said idle time expected 5%, actual idle time 7.5%. They took 2.5% is the idle time. What is abnormal? What is abnormal alone can be the idle time. Normal idle time is not idle time. So this question, abnormal idle time is there. This is multiple labor with idle time. Multiple labor with idle time. As I have done earlier, I'm just going to prepare the table. I'm just going to prepare the table. With idle time means SR into SH, SR into RSH, then AHW will come, AHP will come, and AR into AHP. Let's do the computation table. Computation table category SR into SH, SR into RSH, SR into AHW, SR into AHP, AR into AHP. Whichever question is there in this chapter, even the bigger book, even the question bank or ICI material, I would suggest you to solve any number of question you want to. Just focus on computation table. Every question, are you getting the computation table? Once that is clear, then only you have to worry about the formula. Formula is not the difficult part. Wherever formula is the easier part. Chart is clear, formula will be very clear. Student unnecessarily shift their focus to not the chart, sorry, to the formula rather than the table. We have 3 category of worker: men, women, boys. Men, women and boys. 3 category of workers. Questioner said my plan was to pay 62.5, 40 and 35 4 places. This will come at 4 places wherever SR is there. 62.5, 40, 35. It will come at 4 places: 62.5, 40 and 35. SR, SR, SR and SR. 4 places I'll write SR. AR given in the question is 60, 42.5, 32.5. 60, 42.5 and 32.5. 60, 42.5 and 32.5. Clear? Any doubts on this? AHP is equal to hours paid into number of workers. Hours paid into number of workers. There is a difference between AHW and AHP. AHW's hours worked, 2 hours have got lost. 2 hours have got lost. So men equal to 40 hours. 40 hours. 40 hours we are paying. 40 hours we are going to pay the employee. And in reality, I have 13 men, 4 women, and 3 boys. 13 men, 4 women, and 3 boys is the number I have in reality. I have in reality 13, 4, and 3. 13 men, 4 women, and 3 boys. 13 men, 4 women, and 3 boys. So multiplied with 13 men, 520. For women, it is 40 hours into 4 women, 160. Boys, it is 40 hours into 3 boys, 120. So I write it here. Objective is somehow complete the table. 520, 160, 120. 520, 160, and 120 places. AHW is hours worked. AHW is hours worked into number of worker. Worked is 38. Worked is only 38. 2 hours got lost. 2 hours got lost due to abnormal idle time. 2 hours got lost due to abnormal idle time. So AHW is equal to hours worked into number of workers. Men 38 hours into 13 men. Tell me 38 into 13. 494. Women 38 hours into 4 women, 152. Boys is 38 hours into 3 boys, 494, 152, 114. 494, 152, and 114. Clear? Now RSH is total of AH in standard mix, but we have two AH. There's an AHW, there's a AHP. So whenever we come to this situation, it is AHW because mix variance is comparing these two. Mix variance is comparing. So AHW in standard mix, total of AHW in standard mix is the mix variance. So here total of AHW, tell me the total of the three number. Total of AHW 494, 152, 114, 760, and split this in the ratio of 10 is to 5 is to 5. Split in the ratio of 10 is to 5 is to 5. $380. Okay, women is 190 and boys also 190. Most important part, RSH is the total of AHW. AHW. This chapter mandatory today itself somehow complete all the MCQ. You'll get full clarity because MCQs have been framed in such a manner that entire chapter will get properly revised. Any doubts on this? I write 380, 190, 190. For SH, I need a standard equation. I need a standard equation. How many hours is equal to how many units? Can you tell me how many hours equal to how many units? Last, similar to last question it is. How many hours is equal to how many units? How many hours is equal to how many units? It's not 40 hours equal to 1000 units. Not some. No, tell me what is the equation first. Tell me the equation. Yeah, it's 800 hours. 40 hours into 20 people. 40 hours into 20 people. Last question also I did 40 hours into 100 people. So write standard equation. equation 40 hours into 20 workers equal to 1000 units. 40 hours into 20 workers is equal to 1000 units, is equal to 1000 units, which means 800 hours equal to 1000 units. ST equal to AO. ST equal to AO. Question mark equal to AO was 960 in this question. Actual output is 960. Actual output is 960. Equation, most important is getting the right equation. It's not 40 hours equal to 1000 units. It is 800 hours equal to 1000 units. ST equal to AO. Question mark equal to 960. Question mark equal to 960. You will get 760 split in the ratio of 10 is to 5 is to 5. The table will look something like this. 10 is to 5 is to 5. Again, my repetition will only be the same. Table correctly, you get it. Problem is over. If you get the table correctly, problem gets over. Most important part is always getting the right table. Getting the right table. Any doubts on this? Variance calculation, all this you can practice later, but getting the table correctly is the most critical part. Now comes the overhead variances. We have variable overhead variances. We have fixed overhead variances. First let's discuss the variable overhead variance. Then I come to fixed overhead. Particulars, budget, actual, overhead, output, hours, overhead, fixed cost, ignore it for the time being. Overhead, variable cost, number of days. Number of days has no utility as far as variable overhead is concerned. In variable overhead, we have only one format. Now write that. SR into SH, SR into AH, AR into AH, SR into SH, SR into AH, AR into AH, AR into AH. Standard time is always calculated with the help of actual output. Standard time is always calculated with the help of actual output. So this has another formula called SR into AO. This is called conversion factor. Standard time and actual output can be interchangeably used. Standard time and actual output. Standard time and actual output can be interchangeably used. SR into AO. SH is otherwise called as SR into AO. And this is otherwise called as SR into SO, standard output, not budgeted. This is standard. There's a difference between standard output and budgeted output. So the term SR into SH can be replaced with SR into AO. SR into AO. SR into AH can be replaced with SR into SO, and AR into AH is otherwise called as AVOH, actual variable overhead. AR into AH is otherwise called as AVOH, which is actual variable overhead. Actual variable overhead. Every question, see, some question we will use this, and this. Some question we will use this. Some question you will use everything on output. Some question you will use everything on hours. Some question you will do a combination. If all data is there, this is my preferred approach. I'll be using this, and this. This is what I'll be using in most of the question, because these will be readily available. This will be readily available. Anyway, first question, I'll show you both approaches. Many a time, they may not give data on hours. They may give data only on units. When we did OAR calculation, budgeted overhead by budgeted suitable base, the base can be hours, can be units, can be machine hours, can be labor hours. So variable overhead can be on number of hours. Variable overhead can also be based on number of units. So below the table, first thing, SR per hour is equal to budgeted variable overhead by budgeted hours. Budgeted variable overhead divided by budgeted hours. Budgeted variable overhead divided by budgeted hours. 12,000 divided by 6,000, 2 per hour. 12,000 divided by 6,000, 2 per hour. 12,000 is the budgeted variable cost, budgeted hours. Budgeted variable cost divided by budgeted hours, 2 rupees per hour. SR per hour is 2 rupees per hour. SR per unit is budgeted variable overhead by budgeted output. Budgeted variable overhead divided by budgeted output. One you divide by number of hours, and second you divide by number of units. 12,000 divided by 12,000. 1 rupee per unit. 1 rupee per unit. Clear? In this question, first I will close the problem, then I tell you the conversion factor. See, in this question, actual output is readily available. 13,000. SR into AO. SR into AO. Actual output is directly given in the question. I have highlighted, I have circled SR into AO because that will be readily available. So listen, this is 13,000, and with output I will use rate per unit. With output I will use rate per unit. Listen, don't write it. Listen, with output we'll be using rate per unit. With hours we will be using rate per hour. So this is 1 into 13,000. AH is directly available. Actual hours is 6,600. Actual hours is 6,600. With hours I'll be using 2 rupees, which is rate per hour. Rate per hour is 2 rupees. Rate per unit is 1 rupee. Rate per hour is 2 rupees. Rate per unit is 1 rupee. So first column is 1 into output 13,000. Second column is 2 into hours 6,600, and third column is actual variable overhead. Actual variable cost is 13,300. Actual variable cost is 13,300. That's all. The table is over. The table is over. Be in listen mode. Writing is not very critical. Be in listen mode. This concept. SR into SHR, SR into AO, SR into AHR, SR into SO, AR into AHR, AVOH. Assuming you wanted to do standard time calculation. You wanted to do standard time calculation and want to use SR into SH. I have no problem. You can do it. But here I don't need it. But in case you want to, in an exam situation, if there is a need, I need a standard equation. Standard equation is 6,000 hours is equal to 12,000 units. Standard equation is 6,000 hours is equal to 12,000 units. So 6,000 hours equal to 12,000 units. ST equal to AO, question mark equal to 13,000. Question mark equal to 13,000. 6,000 hours is equal to 12,000 units. ST equal to AO, question mark equal to 13,000. What is the question mark? So this I can write 2 into 6,500. What is 2? SR per hour. SR per hour is 2 rupees into 6,500 hours. 2 into 6,500 hours or 1 into 13,000. 2 into 6,500 hours or 1 into 13,000. That's your wish, whichever way you want to write. 2 into 6,500 or 1 into 13,000 or 1 into 13,000. Same equation. 6,000 hours equal to 12,000 units. AT equal to SO, standard time actual output, actual time standard output, actual time standard output. ST equal to AO, AT equal to SO, AT equal to SO. AT is given 6,600 hours is equal to question mark. 6,600 hours is equal to question mark, and I'll get the question mark. Question mark is, so second column can become 1 into 13,200. Second column can become 1 rupee into 13,200. The second column can become what? 1 rupee into 13,200. The first column can become 2 into 6,500. Your wish which you want to follow, but our normal approach is between SH and AO. I'll prefer AO. I'll prefer AO because it will be readily available. It will be readily available. Between AH and SO, I'll prefer AH. I'll prefer AH because AH will be readily available. AH will be readily available. And AR into AH, what is AR is 13,300. First you divide by actual hours and then again multiply with actual hours. AR into AH is what? AR is dividing. Rate is you divide by the number of hours and then multiply with the hours. What is the point of doing it? Because decimal issues will happen. Decimal gap will come. AR into AH is nothing but actual variable overhead. AR into AH is nothing but actual variable overhead. So SR into SH can otherwise be called as SR into AO. SR into AH can otherwise be called as SR into SO, and AR into AH can otherwise be called as AVOH. AR into AH can otherwise be called as AVOH. Clear? Any doubts on this? Done. Next is fixed overhead variances. Fixed overhead variance calculation and all is not my worry. Calculation you will keep doing it. Coming to fixed overhead variances, same thing. First column is SR into SHR, SR into AO, SR into AO. This question has actual days and budgeted days. If you have both, then PFOH will come into picture or calendar variance will come into picture. Whenever you have actual days as well as what? Budgeted days. Second column was SR into AHR, SR into SO, SR into SO. Third column is SR into PH, which is otherwise called as PO, possible output, possible hours, possible output, and the other name is PFOH, possible fixed overhead. PFOH, possible fixed overhead. Fourth column is SR into BH, SR into BO, otherwise called as BFOH. Write this please. Last column is AFOH. These are the 5 columns. SR into SH, otherwise called as SR into AO. SR into AH, otherwise called as SR into SO. This is in fact, if you remember the table, easiest of the lot is fixed overhead variances. If you remember the table, some students find it difficult in remembering the formula and table. That's where the challenge comes. SR into PH or SR into PO or PFOH. RPFOH, SR into BH or SR into BO or BFOH, and last column is AFOH. Last column is AFOH. Why this is very easy is, clear, written the table. Now I come here. First is SR per unit and SR per hour. Any question you do, SR per unit and SR per hour. How will you do SR per unit and SR per hour is using the data given here. Earlier we were doing variable overhead divided by variable hours. Instead of doing variable overhead, we will do it as fixed overhead. We will do it as fixed overhead. SR per hour is equal to budgeted fixed overhead by budgeted hours. Budgeted fixed overhead divided by budgeted hours. 2400 by 6000. 2400 by 6000. 0.4 per hour. 0.4 per hour. SR per hour is BFOH by budgeted hours. 2400 divided by 6000. 0.4 per hour. SR per unit. BFOH by BO, budgeted output, 2400 by 12,000, 0.2, write this, 0.4 and 0.2. 2400 by 6000 and 2400 by 12,000. 2400 by 6000, 2400 by 12,000. By 6000 and 12,000. My first column you can write in your notebook, 0.2 per unit into 13,000. First column is 0.2 into 13,000. SR into AO. SR into AO. 0.2 into 13,000. 0.2 into 13,000. Second column is SR into AH. SR into AH. SR now is 0.4. For hours it is 0.4. For units it is 0.2. For hours it is 0.4. And for units it is what? 0.2. So first column is 0.2 into 13,000. Second column is 0.4 into 6,600. Third column I'll come to in a minute. Fourth column is 2,400 budgeted fixed overhead. 2,400. Fourth column is directly available. Fifth column is also directly available. Fifth column is actual fixed overhead is 2,500. 2,400, 2,500. Missing is PFOH. Missing is PFOH, for which, as I said, I need both actual days and budgeted days. Both there, I can do it. Both not there, I cannot do it. Both not there. So what we do for PFOH is right. It is very simple. 50 days fixed overhead is 2,400. 50 days fixed overhead is 2,400. PFOH says if more days work, more production will happen, more absorption will happen. Cost will not go up, but more days, more production, and more absorption. More absorption. So 54 days equal to question mark. 54 days equal to question mark. 50 days equal to 2,400. 54 days equal to question mark. What's the number? That's all. Table is over. Table is over. We can keep calculating any number of variances. We can keep calculating any type of variances. Focus is very simple. Completing the table. Completing the table. If table gets completed, then only it will become easier for you to do in an exam situation. If you're not able to do the table, it will become very, very difficult. And looking at the kind of difficulty paper gives, missing out on one or two chapters can become very troublesome in exam. Because I said that mock test paper was a very tough one. In that, the only easiest question was standard costing. 10 mark was a very easy question in standard costing. But what students do, they don't prepare in this paper. They say standard costing is tough, I'm not going to prepare for it. In case you have not prepared for standard costing and that comes as an easy question, you'll unnecessarily lose marks. Any doubts in this? Any doubts in this? Just give me a minute. Okay, I'm going to do that question which I said. This was the question which came in exam on standard costing. It's a 10 mark case. That is the mock test paper. It's the mock test paper where everything else was very, very tough. Not every question. So at least 40 marks was very tough. Some were very lengthy. But this 10 mark question, in case you have clarity on concept, you can close it in 5 minutes because it's a case scenario based question. 10 marks, 5 minutes is possible. But only thing is, obviously clarity has to be there. I'm not reading the first two para, they are of no use. That just tells what the company is doing, all that. Information is very simple. The only information I have is units produced, budgeted data 10,000, actual data 9,500. Fixed overheads 20 lakh, 1950 plus 1 lakh is 2050. They have given some information, but that's of no use. Basically, actual fixed overhead is 20 lakh 50,000 and planned fixed overhead is 20 lakh. The budgeted fixed overhead is 20 lakh. Hours worked 15,000, 14, 250. 15,000 and 14, 250. Variable overhead rate 50 per hour. 50 per hour and reality 50 for the first 10,000 and 60 for the additional. 60 for the additional. I have to do a table for variable overhead variances, do a table for fixed overhead variances. If I do that, problem is over. If I do the table properly, the problem is over. The requirements is fixed overhead cost variance, fixed overhead volume variance, variable overhead efficiency variance, variable overhead expenditure variance, fixed overhead expenditure variance. All these variances will come from the table, So I am not getting into the calculation part of it, but if you are able to do the table, it is taken care of. Now coming to variable overhead. Variable overhead, they have said 50 rupees per hour. Per hour rate is given. Per unit rate is not given in the question. If I want, I can calculate. or I can leave it as it is. 50 per hour is variable overhead. 50 per hour is variable overhead. Now coming to the variable overhead part, our table looks like this: SR into SHR, SR into AO, SR into AH, SR into SO, AR into AHR, AVOH. This is the table. Now, standard rate is 50 per hour. Can you read the question and tell me what is the standard equation? It is there. What is the standard equation? The equation is there in the question. It's there in the table only. What is the standard equation? How many hours equal to? 15,000 hours is equal to 10,000 units. So my standard equation is 15,000 hours equal to 10,000 units. Then ST equal to AO. ST equal to AO. Question mark equal to 9,500. Question mark equal to 9,500. What is the question mark answer you got? 14,250. The first column is 50 into 14,250. Second column is also 50 into actual hours is 14,250. Actual hours is 14,250, which means there is no efficiency variance. Efficiency variance will be 0 when you do the calculation. When you do the calculation, 50 into 14,250 and AR into AH is 50 into 10,000. 50 into 10,000 plus 60 into 4250. That extra 4250 at 60 and the original is at first 10,000 is at 50 rupees and extra hours is at what rate? 60. So 50 into 10,000 plus 60 into this is 4 marks calculation. There is a question requirement of efficiency variance and expenditure variance. This will take care of 4 marks requirement. This will take care of 4 marks requirement provided you are able to write this properly. Yes, if I wanted to use rate per unit, if somebody wants to use rate per unit, it is like this: 10,000 units equal to 15,000 hours. 1 unit equal to 1.5 hour. 1 unit is equal to 1.5 hour. Every hour is 50 rupees. So 1 unit is 75 rupees. 1 unit is 75. First column can become 75 into 9,500. 75 into 9,500. If you want, you can use first column as what? 75 into 9,500. 75 into 9,500. SR into AO or SR into SH, whichever way you want to use it. Both are okay. Clear? Any doubts in this? Now coming to fixed overhead, question does not have data on actual days and budgeted days. It doesn't have information on actual days and budgeted days. In case that information is not there, in case that information is not there, the PFOH will not come. PFOH will not come. So my table will look like this: SR into SHR, SR into AO, SR into AHR, SR into SO, SR into BH, BO, BFOH, AFOH, BFOH and AFOH. Any question, I normally fill the last 2 columns directly because it will be there. BFOH is 20 lakh, BFOH is 20 lakh, AFOH is 1950 plus 1 lakh, AFOH is 1950 plus 1 lakh. So this is 20 lakh and this is 20 lakh 50,000. SR per unit is 20 lakh divided by 10,000 units. SR per unit is 20 lakh divided by 10,000 units and SR per hour is 20 lakh divided by 15,000 hours. 20 lakh divided by 10,000 units and 20 lakh divided by 15,000 hours. 20 lakh divided by 10,000 will become 200. So my first column is 200 into 9,500. SR into AO. SR into AO. 20 lakh divided by 15,000 is how much? 20 lakh divided by 15. 13 133.33 into 14 250 into 14 250. If you do the table properly, you would have got 10 marks in this. Else, this would have become very, very tough because in case you are not aware of the concept, you will not be able to get to the answer. This would have ensured 10 marks in the question, which was the easier part. This was the easier part of the paper. Ideally, will not take even if you try to do proper, because in a case scenario, you need not show the proper workings and all. Even if you try to analyze in detail also, it will take you maximum 10 minutes, maximum 10 minutes to close the question. But the challenge is people think it's a tough area and they leave it. They leave it. Leaving certain areas and choice and all will not work in case paper turns out to be very tricky. Clear? Any doubts on this? Okay, this is one more thing which is called budget ratios, which is called budget ratios. Budget ratios have been frequently tested in exams. Either it comes as a proper question like this, or it will come as a 2 mark MCQ. It will come. So what ICI has done is in the recent MTPs and other places, what they have done is first 10 marks is one case scenario, another 10 mark is one more case scenario, and then 5 questions of 2 marks which are from different areas. 5 questions of 2 marks which are from different areas. Those 2 mark question, budget ratio is one of their favorite area which they have added in RTP sometimes, which they have added in MTP. Some questions have come. Now, for me to remember this, somewhere I have to remember this chart: efficiency, capacity, calendar. This is the chart. Listen, efficiency ratio is SH divided by AH. That's all. You have to divide rather than subtract. SH divided by AH. Capacity ratio is AH divided by PH. AH divided by PH. Calendar ratio PH divided by BH. PH divided by BH. Volume ratio, first item SH, last item divided by BH. SH divided by BH. So same chart we are going to use, but I'll not write SR. I'm not going to multiply with SR. The chart is like this. In order to do the FOH ratios, my chart is like this: SH, AH, PH, BH. I can write SR from this side, but I'm not going to write SR in the table. SR will not come in the table. This part is efficiency, capacity, calendar. Efficiency, capacity, and calendar. In case calendar is not there, PH will be removed and it will be called BH. It will be called BH. When will calendar be removed? In case you do not have information on actual days and budgeted days. In case you do not have information, that will get removed. So I have efficiency ratio, standard time by actual time. This was a labor chapter formula. Efficiency ratio, standard time by actual time is a labor. Capacity, actual time by possible time. Actual time by possible time. Calendar, possible time by budgeted time. Possible time by budgeted time. All together is called volume or activity. All together is called volume or activity, which is SH by BH. SH by BH. Apart from that, there are 2-3 extra formulae which ICI has added. I'll explain them. So efficiency ratio, standard hours by actual hours. It's coming from that chart: SH, AH, PH, BH. SH, AH, PH, and BH. Standard by actual. Calendar is possible by budgeted. Activity. Activities all three put together. Activities all three put together, which is standard hours by budgeted hours. Capacity is, there are 3 types of capacity ratio ICI asks. They may ask a ratio called standard capacity usage ratio, actual capacity usage ratio, and actual usage of budgeted capacity. Actual usage of budgeted capacity. This actual capacity usage ratio comes from our formula. Actual capacity usage ratio comes technically from the formula. Actual, sorry, that also doesn't come. They have given a variant. Leave it from the formula. Just give me a minute. Okay. So I have 3 formula. One is called standard capacity usage ratio. What is standard capacity usage ratio? Is I can produce 5 lakh units, but I plan to produce only 4 lakh. I plan to produce only 4 lakh. 4 lakh divided by 5 lakh is called standard capacity usage ratio. Standard capacity usage ratio. You did only 4 lakh, whereas you could have done 5 lakh. This is standard capacities. What are you planning to achieve divided by what is maximum possible? What is maximum? Against this 4 lakh, in reality, I did only 3 lakh. 3 lakh by 5 lakh is called actual capacity usage ratio. And 3 lakh divided by 4 lakh. 3 lakh divided by 4 lakh is called actual usage of the budgeted capacity. Actual usage of the, there is a maximum capacity, there is a budgeted capacity, there is an actual capacity. Maximum is what is fully possible, budgeted is what you want to achieve, and actual is what has been achieved by the organization. What has been achieved by the organization. So capacity ratios, we will not use the table, we'll just do it like this. And these three, efficiency, calendar and activity formula, will come from the chart. Efficiency, calendar and activity formula will come from the chart. Let's see it in a question now. Standard working hours, 8 hours per day of 5 days per week. I'll keep reading, I'll explain. 8 hours per day of 5 days per week, so 40 hours. Maximum capacity 50 employees. Maximum capacity 50 employees. So my maximum capacity is 40 hours into 50 people. 40 hours into 50 people. The question is talking about 4 weeks. This is my maximum capacity. This is my maximum capacity. In that maximum, I want to achieve how many employees? 40. I want to do only 40 employees. My maximum is what? 50, but I am happy with only 40. I'm happy with 40. So my budget is 40 hours into 40 people into 4 weeks. Maximum possible 8,000. Budgeted is 6,400. Reality is 6,000. Reality is 6,000. Maximum is 8,000. Budgeted is 6,400. And reality is what? Only 6,000. The 6,400 is also given in the question. Expected to be worked. Expected to be worked. Standard hours expected to be earned. Standard hours expected to be earned. And standard hours earned. These two numbers technically need not be given in the question. That's what I've calculated. 8,000 hours and 6,400 hours. 8,000 hours and 6,400 hours. What we have done only 6,000 hours of working, and that is equivalent of 7,000 hours. That is equivalent of, people worked only for 6,000 hours, but they produced something which is equivalent of what? 7,000, which is equivalent of 7,000. You need not, okay, write the table. The table is like this: SH, AH, TH, BH, and one more is maximum hours. Standard hours, actual hours, possible hours, budgeted hours, and maximum hours. Standard, actual, possible, budgeted. SH, AH, PH, BH are fixed overhead formulae. Maximum is one extra addition. Maximum is 8,000. Maximum is 8,000. I'm planning to achieve 6,400. I'm planning to achieve 6,400. I achieved only 6,000, but that is equivalent of 7,000. Why possible hours is coming in the question? Because there is one special day holiday. One special day holiday. It's like this: 20 days people will work for 6,400. Plan 20 days, 6,400 hours. 20 days is equal to 6,400 hours. 19 days equal to question mark. 19 days equal to question mark. 6,080. First is comparing these two, right? Efficiency ratio is SH divided by AH. Efficiency is SH divided by AH. Efficiency is standard time divided by actual time. Standard time divided by actual time. 7,000 by 6,000, what's the number of hours? So what is the percentage per into 100? 11 into, sorry, 116.67 percentage. 116.67 percentage. First is efficiency. Second is capacity, don't use it. Capacity, we have three variants, we'll see it later. Calendar is comparing these two, PH by BH. Calendar, PH divided by BH. 95%. SH with BH is activity or volume. SH with BH. First item versus the fourth item. Standard time by budgeted time. Standard time by budgeted time is called activity ratio. Activity is 10 point. Clear? See, there is one capacity ratio which I can do as the 6,000 divided by 6,080, but they have asked different types of capacity ratio. I'll discuss them quickly. Standard capacity usage ratio is I plan to work for 6,400 on a base of 8,000. I plan to work for 6,400 on a base of what? 8,000. Actual capacity usage ratios, I'm working 6,000 on the original plan of 8,000. On the original, that is the maximum plan of 8,000, and actual usage of budgeted is 6,000. 6,400 can also be taken as 6,080, can also be, because this is what capacity is. But I think ICI does 6,400, so I leave it whatever ICI is doing. 6,000 by 6,400 can be argued as 6,000 by 6,080 also. 80, 75, 93.75, 116 and 95. 116 and 95. Clear? Now, questions may come in exam like this also. Standard capacity usage ratio 80. Actual capacity usage ratio 60. How much is the actual usage of budgeted capacity? I am explaining the various interlink. Listen. Standard is 80 on 100. 100 is maximum. Let's take. Actual is 60 on 100. Actual is 60 on 100. What is actual usage of budgeted capacity? 60 on 80. 60 on 80. 60 on 80. This is the interlinkage. This is the interlinkage. 80 on 100. 60 on 100. 60 on 80 is called actual usage of budgeted capacity. Actual usage of budgeted capacity. This can come as a 2-mark MCQ. Actual usage of budgeted capacity. The formula technically is actual capacity usage ratio divided by standard capacity usage ratio, but I don't remember the formula. I'm just explaining you the logic. 80 on 100, 60 on 100, 60 on 80. One of this can come. A company has a capacity utilization of 85%. Activity is 95%. Which of the following is efficiency ratio? Now listen. Activity is equal to efficiency plus capacity plus calendar variance. If you do as a variance, if you do it as a variance, if you do it as a ratio, efficiency into capacity into calendar, efficiency into capacity. I'm not talking about those three different capacity ratio. I'm not getting into actual usage of all those are different ratios. Okay, efficiency ratio into capacity ratio into calendar ratio is equal to activity, is equal to activity. Activity ratio given in the question is 0.95. I'm writing 95 as 0.95. Capacity is 0.85. Calendar is not there. Calendar is not there. Tell me what is efficiency now. 112. 0.95 divided by 0.85 into 100 to express in percentage. Into 100 to express in percentage. Efficiency into capacity into calendar. Not those three capacity ratio. They are altogether different. Standard capacity usage ratio, actual capacity usage ratio, and actual usage of budgeted capacity. All those are entirely different. Let's not link it with them. Let's not link it with them. But if you add, multiply the three. If you multiply the three, you will get activity ratio. You will get activity ratio. Here they have not, I have not multiplied with calendar because calendar is not there. Otherwise, calendar also will have to be multiplied. Calendar will also have to be multiplied. Clear? Any doubts on this? 7 is a variant of this type of a question, that is fixed overhead and variable overhead. Only add on when you do at home. I want you to just know there is a semi variable cost. What you need to do is you need to remove this from the question and add some part to variable expense, add some part to fixed expense given as per the question. Then it becomes like a normal problem. Then it becomes like a normal problem. A part of it, the question says 60% is fixed, 40% is variable. So add 60%, 1 lakh 80, 60% to the fixed cost, 1 lakh 80, 40% to the variable cost. This is the budget reality. 19,200, 60% to the variable cost, 19,200, 40% to the, so whatever, fixed and variable, whichever way you want to add it, consider that, and thereafter please start calculating whatever the question has asked. Variable overhead cost variance is asked, variable fixed overhead volume, expenditure, calendar, cost, whatever they ask, you can keep calculating it. Only thing is, please move a part of the expense to the variable, a part of the expense to the fixed. This is a homework question, or this is a question which you will do at home. Okay, I have few comprehensive questions which I want to discuss. I'm giving you a small 10 minutes break, then maybe another 30 minutes after, 30 to 45 minutes after the break, I'll do those comprehensive questions. At least I'll discuss those comprehensive questions. Standard costing is almost over. It's almost over. Formula, I have not discussed it. Formula, again, I'm repeating formula. You'll have to go through those chart technique. But how to work out, we have seen different variety of question. This should be sufficient from an exam point of view. And all the MCQs you have to do. We'll take a 10-minute break and then I do the comprehensive question. Okay, I'll now discuss comprehensive question. What is comprehensive question is which asks for combination of material, labor, as well as overhead variance, or only material and labor, something around that. Okay, coming to question 9. ABC Limited has prepared, we'll discuss this. ABC Limited has prepared the following estimation for the month of April. Material A, material B, skilled labor, unskilled labor. Till now, my information says there's a material A, material B, there's a skilled labor and unskilled labor. Normal losses 10 percentage of the input. Normal losses 10 percentage of the input, and an idle labor time of 5% of labor hours was also expected. Idle labor time of 5% is expected. Expected is called normal idle time. Expected is called normal idle time. At the end of the month, the following information has been collected from the cost accounting department. Company has produced material A, all this data they've given, and they've asked for all labor variances as well as material variances. We'll quickly try to do the table. Material variances, multiple material. There is a material A and material B, and labor variances is multiple labor without idle time. Multiple labor without idle time, because question is saying 5% is expected. What happened, I don't know. Whether 10% happened, 15% happened, or 6% happened, we are not aware. And question is also not asking for idle time variance. Question is not asking for idle time variance. In this, the most trickiest part will be SH calculation. So let's see the material variances part. Open the table. Material variances, SP into SQ, SP into AQ, SP into RSQ, SP into AQ, AP into AQ. Material A, B. The most trickiest part will be on SH calculation, material A and B. What is the price we are planning to pay? Price which we are planning to pay, standard price. 45 and 30. 45 rupees and 30 rupees at 3 places. 45, 30. 45 and 30. Actual price paid is 43 and 32.5. 43 and 32.5. Objective is to get the table, so focus is quickly. If you get the table, everything else will automatically fall in place. 43 and 32.5. AQ, what is the actual quantity used or purchased, whatever is given in the question? Actual quantity 900 and 650. That is the actual quantity used by the company. Could be purchased, not purchased, I'm not bothered. 900 and 650. 900 and 650 at two places. 900 and 650 at two places. RSQ is the total of AQ. RSQ is the total of AQ. 900 plus 650, 1550. 900 plus 650. RSQ is the total of AQ. Total of AQ in 4 is to 3. 800 is to 600. In 4 is to 3. In the ratio of 4 is to 3. 900, sorry, 800 is to 600. 800 is to 600. 4 is to 3. Split 1550. 4 is to 3. 886 and 6. 664. I can write two decimal also, that's okay. 886 and 664. Split in the ratio of 4 is to 3. Split in the ratio of 4 is to 3. Standard quantity can become tricky many times. This is not very tricky, but tell me, SQ, how do I calculate? SQ calculation, how will you calculate? Based on what? SQ is computed with the help of what I said? Actual output. AO into input by output. AO is 1480. AO is 1480. Input output ratio is somewhere given in the question. There's an input output ratio given. What is the input output ratio? Hundred by 90. There is a loss of 10%. There is a loss of 10%. 100 by 90, and I'll 1480 is given. Company has produced. Company has produced 1480. Actual output is 1480 into 100 by 90 into 100 by 90. What's the number you get? Split that in the ratio of 4 is to 3. Split that in the ratio of 4 is to 3. So this is how it will look. And cost, price, mix, yield, everything is just a formality. Cost, price, mix, yield, everything is a formality. This is the table. Any doubts on this? Clear? Then comes our labor variances. Labor variance, as I said, it is multiple labor without idle time. Multiple labor without idle time. There was one exam question where they said 5% expected, 7.5% happened. So from hours paid, you subtract 2.5%. You subtract only 2.5%. What many students thought is, from this I'll subtract 5%. From this I'll subtract 5% as idle time. There's no idle time because question has not given what is the actual idle time. What is the actual idle time? Table will have, right, SR into SH, SR into RSH, SR into AH, AR into AH, skilled, unskilled, skilled and unskilled, skilled and unskilled. The best requirement here is the SH calculation, which is the very tricky part. Very good way the question was framed. SR is 37.5, 22, 37.5, 22, Always SR and AR is very simple, straightforward, directly available. 37.5 and 22. AR is 35.5, 23. 35.5 and 23. AHS copy paste. There's no idle time. There is no idle time. Let me be very clear. There is no idle time. I don't know. Because idle time, if it was there, I would have done AHW and AHP. 1200, 860, 1200, 860. T. In case you are not able to get standard time, at least this much you can do. You can calculate some of the variances. Some of the variances would have come from this table itself. Only difficulty most of the time is standard quantity and standard time. Standard quantity and standard time. In case you are not getting that, standard quantity will be used for the main variance and one more variance. So out of the four variances, two you can get it without standard quantity, and out of the four labor variances, two you can get without the SH. Whatever is possible, at least you should complete. RSH is total of AH, which is 2060, 2060 split in the ratio of 5:4. Split in the ratio of 5:4. 2060 split in the ratio of 5:4. How much? 1,144 and 916. So all this is, till this, nothing was difficult in labor variances. You should start writing. Unless you write it, you will not understand. You should write SR. SR you fill at three places. Confidence will improve. AR you wrote, again confidence improves. AH you wrote. I have not done any calculation. AH I just put a total and split. SH is a very tricky one. Listen. Standard equation is given in a very roundabout manner here. Listen. My plan was to work the original plan. 1800 hours. The original plan is 1800 hours. In this, 5% is normal idle time. So we were working for 1710 hours. 1710 hours. 1710 hours. This will, the original plan, this will give me 1400 kgs minus 10%. This will give me 1400 kgs minus 10%. 10% is my standard loss. 1400 kg. So they linked it with the raw material. They linked it with the raw material. So this will give me 1260 units. 1260, and this is tested in one of the MCQ. If you see some MCQ will test this. 1260 units. Thereafter, ST equal to AO question mark equal to 1480. Question mark is equal to 1480. 1710 hours is equal to what? 1260 units is equal to 1260 units. ST equal to AO question mark equal to 1480. What is the question mark you get now? 2009. And split that in the ratio of 5:4. Split that in the ratio. This came, I think, either in May 24 exam or September 24 exam. One of the exam this question has come. I am sure one of the exam they ended up asking this question. So 2009 split in the ratio of 5:4. Split in the ratio of 5:4. So this is how it will look after you split 1116, 893, 1144, 916, 1200, 860, 1200, 860. Again, my repetition is very simple. If you prepare the table, everything is automatically taken care of. Everything is automatically taken care of if the table is prepared properly. Variance calculation you do few questions, go through the charts, whatever you want to do, or go through the detailed video also. In my YouTube channel, there's a detailed video on standard costing where formula calculation part you listen, problem solving you don't listen, formula again listen, problem you don't listen. So that's your wish, however you want to do, or you have learned it from some other teacher, follow whatever approach you want to follow. But my point is very simple. If this table is done correctly, everything else is just a formality. Any doubts on this? Okay, another comprehensive question which came in September 24 RTP. ABC Private Limited is engaged in the manufacture of a product Q. product has the following standard production requirements determined by the technical team. Raw material 2 units at 2 per unit. Raw material 2 units at 2 per unit. These are very important things when you read. 2 units at 2 per unit means input output ratio is 2 is to 1 and SP is 2 rupees. Standard price is 2 rupees for every unit of raw material. Skilled labor 1 unit is equal to 2.5 hours. 1 unit is equal to 2.5 hours and 5 per unit. 5 per hour is the SR. 5 per hour is the SR. Fixed overhead 7.5 per unit. I can break it as 2.5 hours into 3 per hour. Why 2.5 hours? Because the same basis. The same basis into it could have been what? 3 per hour. I'm just breaking it. What this means is SR per hour is 3 rupees for fixed overhead and per unit is 7.5. Per unit is 7.5. The input of raw material Z has a yield of, okay, so input output ratio is not 2 is to 1. Input output ratio is 2 is to 0.8 because it will give only 80% output. It will give only 80% output. So 2 is to 0.8. 2 is to 0.8. Yield of 80%. Actual quantity consumed is 24,000. Usage variance 2,000 favorable. Usage variance is 2,000 favorable. So they have given some variance. Further, the actual material cost is 45,000. Actual cost is 45,000. Actual working hours were 30,000, for which the labor cost paid by the company amounted to 1,20,000. Some idle time variance is there. Some idle time variance is there. Actual fixed overhead 1,50,000. Expenditure variance is 25,000. So some data points they have given. Some data points we have to calculate. Now coming to material, it is a single material problem. It is a single material problem. So open the table. SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. Standard price is 2 rupees per unit. Standard price is 2 rupees per unit. Standard price is 2 rupees per unit. Actual quantity consumed is 24,000. Actual quantity consumed is 24,000. Actual quantity consumed is 24,000. And they have said actual material cost. Actual material cost is AP into AQ is 45,000. Can you tell me the AP? 45,000. Now I don't know what are the requirements of the question. I'm just filling it. My purpose is just to fill the table. 1.875. Question has said usage variance is 2,000 favorable. Usage variance is 2,000 favorable. Usage variance formula is SP into SQ minus SP into AQ. That will give me the first column. So material usage variance is SP into SQ minus SP into AQ. SP into SQ minus SP into AQ. Formula and all you will have to remember. So I can't help it on the formula side. Usage variance is SP into SQ minus SP into AQ. They have given the variance to be 2,000. So 2,000 is equal to 2 SQ minus 48,000. SQ is equal to 25. Clear? Table is over. Job is over. Requirement of the question is C. Actual output is produced. Till now, with AO, you are calculating SQ. Now reverse. Reverse is SQ is equal to AO into input by output. SQ is equal to AO into input by output. It works in the reverse order now. AO into input by output 25,000 is equal to AO into 2 divided by 0.8. 2 divided by 0.8. And this part will also come when I do the calculation, material price variance and material cost variance. I'm not doing the calculation, but this part will also come. Any doubts on this? This is using the material variance, using the material variance. Then comes the labor variance part. This is single labor with idle time. Single labor with idle time. Why with idle time? There is a reference of idle time variance in the question, and no multiple category of labor. No multiple category of labor. So my table will be SR into SH, SR into AHW, SR into AHP, AR into AHP, SR into SH, SR into AHW, SR into AHP, AR into AHP. Clear? SR given in the question is 5 rupees per hour. SR given in the question is 5 rupees per hour. So 5 into 1 unit is equal to 2.5 hours as per the question. 1 unit is 2.5 hours. AO equal to ST. AO we calculated. 10,000 units is equal to question mark. 10,000 units is equal to question mark. How much you got? 25,000. With this, my third MCQ can get answered. And if I want, I can copy these numbers also. 28,000 is net actual hours, idle time is 2,000 hours. If I want, I can copy these numbers also, because see, third MCQ requirement is standard hours, net actual hours, and idle time. Standard hours 27,500, not my answer. Standard hours 22,500, not my answer. Standard hours 24,000, not my answer. Standard hours 25,000, which means net actual hours has to be 28,000. Idle time has to be 2,000. I can, if I want, I can copy paste. If I want, I can copy paste. Anyway, we will do the calculation. We will do the calculation. So SR into SH is 5 into 25,000. Then the question has said, during the year, actual working hours were 30,000. Actual working hours were 30,000. So last column is 30,000. Actual working hours are 30,000. And I paid 1,20,000 for 30,000 hours. I paid 1,20,000. So which means 4 into 30,000. 4 into 30,000. 1,20,000. 5 into 30, 1,50,000. 5 into 25, 1,25,000. AHW is missing. AHW is missing, for which they have given this variance. Labor idle time variance. Labor idle time variance. Labor idle time variance as a formula. Labor idle time variance is equal to SR into AHW minus SR into AHP. Idle time variance is negative here. Minus 10,000 is equal to 5 AHW minus 1,50,000. You will get AHW. AHW is net actual hours. Net actual hours is hours work technically. 5 AHW minus 150. AHW minus 150 was the number you get, which is what I was saying, that I could have got this number. Standard hours 25,000, net actual hours is 28,000, idle time is 2,000. Idle time is 2,000. Then the question has asked for labor efficiency and labor rate variance. See, I have been telling this from the beginning. In case 4 MCQ options are there, rate variance 25,000 adverse, rate variance 30,000 adverse, rate variance 30,000 favorable, rate variance 25,000 favorable. Just calculate rate variance. Just calculate rate variance. Let's not get into efficiency. Let's not get into efficiency. We'll just calculate what? Rate variance and copy paste the answer. Copy paste, because rate variance, once you get, for example, rate variance here is these two. 30,000 favorable. Rate variance is 30,000 favorable. With 30,000 favorable, I have 25,000 adverse. With 30,000 favorable, I have 25,000 adverse. Fixed overhead volume variance. I'm not doing the fixed overhead part. Fixed overhead entire table is not needed. Volume variance formula, if you remember, it is SR into AO minus BFOH. SR into AO minus BFOH. SR per unit is 7.5. AO we calculated 10,000. We calculated 10,000. So 7.5 into 10,000 is 75,000 minus budgeted fixed overhead somewhere will be there in the question. You calculate that and then calculate fixed overhead volume variance. Calculate fixed overhead volume variance. This is a practice question for you. Another here, it's a reverse working. From the variances, you will have to get to the table from the variances. See, whenever you read something like this is the most important data. Standard material input is 20 kilogram. Input output ratio is 20 is to 1. Input output ratio is 20 is to 1. Standard price is 24 per kilogram. Standard price is 24 per kilogram. Standard rate for labor is 72 per hour and standard equation is 5 hours is equal to 1 unit. 5 hours is equal to 1 unit. Fixed overhead is 100% of labor. So whatever is the rate for labor, the same is the rate for overhead. The same is the rate for overhead. Clear? Any doubts on this? With this, I am covered with standard costing. As I have been telling in the classes I have done. See, usually my regular costing classes go on for 150 hours. We have spent around 30 hours effectively, 30 to 35 hours effectively we have spent in the class. So obviously that amount of coverage is not possible, but I'm very confident about the kind of coverage I have done. You just need to supplement it with what I told in each of the chapter. Solving MCQs will be very, very critical. Unless you complete that, your clarity on concepts will not be there. This paper becomes difficult for students because somewhere the clarity on concept is not there. If you struggle with concept clarity, you are going to find it very, very difficult to complete the paper. And also from an exam point of view, completing paper is becoming a challenge. So only one rule I have been telling every student of mine, 1.5 minutes per mark. If a question is a 10 mark question, try to complete it in 15 minutes. If you are almost 90% done, spend some more time and complete it. But if you are only halfway and 15 minutes is over, no point in spending more time on that question. No point. You can come back later. You can come back later. Leave space, come back later. But rule is 1.5 minutes per mark, which is 15 minutes for a 10 mark question and 150 minutes for your 100 mark paper. Extra 30 minutes is to fill those gaps which you could have left. At that time, you will think which question you want to fill because you know which question you are more confident of. If you are not confident in a question and you try spending more time on that, doesn't serve any purpose. You are just wasting time. Wasting time will not help you. With this, I am done with everything. If there are any questions on how to write exams or any preparation question, anything you have, let me know, else we end the session. If there are any doubts, any guidance you need, let me know. Else, I am kind of done. One chapter is pending that you take care on your own. Anyway, my YouTube channel has certain videos around that also, has some revision videos. You can watch that. Let me know if there are any questions now. Anything you have, any doubts, anything on the subject, my subject, other subject, anything, anywhere there is any guidance needed, let me know, else we end it. Clear? No doubts. Everything is fine. Full costing is fine. Okay, we'll end then. Thank you, friends.